To the show, let's take a quick look at how the markets are panning out to be right now. Well, Nifty 50 is trading within a tight range. It's down by about 0.12%. The fall from high is roughly 76 odd points, and the gain is also hardly anything. In terms of the broader markets, they're doing a tad bit better than the benchmarks. The mid cap 150 is up by about 0.26%. The small cap 250 is up by about 0.18%. Let's also pull up the advanced decline ratio and see what the breadth of the market looks like. Well, there you go. There are around 1450 odd advances versus 700 odd declines. So the ratio is 2:1 roughly. Let's also pull up the Nifty heat map and see what counters are actually doing well and keeping the Nifty in check. There you go. The exact heat map is divided into 2/3 of ratio, and there you go. Some counters doing well and a lot of those counters in red. There's Infosys, which is down by about 1.8% ahead of its results. There's Hindalco, Maruti, Eternal, that is Zomato, not doing very well in trade today, but some counters that are doing well is IndusInd up by 4% of course following the news. Trent up by 2.3%. Axis Bank doing well in trade today, about 2%. Let's also pull up the sectoral heat map and see what sectors are doing well. There you go. There's Nifty PSU Bank, which is up by about 1.5%. Nifty Private Bank up by about 0.76%. Something that's not doing well is Nifty IT under pressure. Earnings one by one are coming. Wipro is expected to post its results today. Infosys to come tomorrow, and TCS we've already seen. Nifty Metal down by about 0.7%. Nifty Auto also under pressure, down by about 0.5%. Let's also pull up the BSE 500 and see what counters are buzzing in trade today. There you go. There's JBM Auto, which is up by 10%. Hikal Ltd is up by about 6%. Century Textiles is doing well comparatively. Something that's not doing well is MGL, Coromandel International, IGL down by about 2.7%, and there's Rainbow Medical Hospital, which is also down by about 2.6%. IndusInd, of course, a Nifty 50 stock. You can see that in BSE 500 topping the chart as well. There's TCI Express also doing well, up about 4.2%. So these counters doing well in trade today. With that, let's also welcome in our guests, Vaishali Parekh, VP Technical Research at Prabhudas Lilladher, joining us, and with that, Rajesh Agrawal, Head of Research at AUM Capital, also joining us now. Welcome to both of you. Before I move on to stock-specific action, Vaishali, anything specific that you're observing on the charts for the Nifty as well as the Bank Nifty levels today?
Very good morning, both of you. I think, yes, so market is in a good uptrend. We may see, as far as major index Nifty, a little bit of a consolidation. We saw good run up in the last few days. I mean, it has been a very good, strong run. So as far as Nifty is concerned, 23,300 is a resistance. Above that, we would be looking at 23,500 and so on. But Bank Nifty continues to outperform, and I would go rather stock specific. As you said, PSU banks should be the ones which should be focused on. And in the private sector, I think Axis and IndusInd, they are showing good strength. So I would be, as far as trading strategy is concerned, these are the stocks that we would be looking at.
Okay. All right. And good morning to you, Vaishali, and Rajesh, to you as well. The first question we're taking today is from Raghu's writing in from Nellore, and he's asking about Swiggy. And interestingly, quite a few investors did deploy funds into this platform company, and Raghu has deployed quite a considerable amount. So as much as 3,600 shares were bought at a price of 347.5, which is not the worst buy price because the stock is currently at 336. So he hasn't lost a lot of value. Of course, because of the size of his acquisition, he has lost about 41,000 rupees. But other people, Rajesh, have lost more, because the kind of erosion that you've seen in this particular stock is quite significant. What should he do with this, and what should the expectations be?
Good morning, Alex. Good morning, Mahima, Vaishali. I concur to your idea that a lot of people have lost a lot of money in this platform stock, be it Zomato, that's Eternal, or Swiggy. But the fact remains that these companies are good for a long term. By long term, I mean at least 5-6 years down the line, they might turn around and give strong numbers because of the kind of penetration they are having, the kind of demographic change, the kind of change in mindset of people by ordering food, and not only food, but even groceries and other things online. Even yesterday, we saw a news that Airtel SIM card would be there on Blinkit. So these are something that's happening, but these things to go into numbers would take some amount of time. In the short term, there would be pressure because we have seen Q3 numbers being very bad for both these companies, Swiggy as well as Eternal. But I don't think that anything miraculous would be happening in the next 2-3 quarters or so. The numbers would be in pressure, margins would be in pressure, competition is heating up. New players like Zepto and other players are coming into the fray. So in the short term, there might be some amount of pressure. And if you're looking for a short-term period, maybe 6 to 9 months, it's better you try to get out on every rise. And if you're looking for long-term, you can carry on with your position, but still your position is very high. What I would say is on every rise, book partial profit and carry on with the rest.
Right, so that's the view with regards to where platform companies are concerned, especially Swiggy as well as Eternal. The next question is on IndusInd Bank. Lots have been happening with this counter. Upendra from Jaipur has been holding 170 odd shares, bought at 1450 a piece, and he's sitting on a significant loss of 1 lakh rupees right now, and he's been holding this for more than a year now. He's a long-term investor. He wants to know whether he should book a loss and invest in a separate banking stock. Rajesh, I'll stick with you for this query. We've been covering the entire IndusInd saga in a very detailed manner, but since he's sitting on a significant loss, do you think that he should book losses now? Currently the stock is up 4%, and should he invest in some other banking counter is what he wants to know.
See, it's a very difficult question because IndusInd Bank as such is not a bad bank. It's only because of the kind of news flow that came in, and that's why it crashed. And yesterday, with some amount of positive news flow about the figures not being that great, it's reacting to that. If I talk of valuation at this point of time, it's almost 1 times price to book, even less than that. So trading at a very attractive valuation, I would say. But you never know, if something more creeps up, then it can go. It can take another blow. But unless there are no negative news in the recent past, which I concur that there won't be because of RBI vigilance and all, one can continue along with this with a target of maybe 875, 880 or levels in the next few months. As far as deploying new money in banking sector is concerned, we are very bullish on Axis or a Kotak, which have not done anything in the recent past. Not to forget HDFC, which is the market leader. In PSU side, you have a large cap name like SBI or Bank of Maharashtra in the mid cap size.
All right, so Axis Bank, you said ICICI Bank as well, right, Rajesh?
Axis and Kotak.
Kotak, okay. Kotak and of course HDFC Bank. In fact, a lot of FI buying was seen in HDFC Bank yesterday, and interesting numbers panning out there. All right, we've got a first caller for the day. Amit is calling in all the way from Dubai. Amit, a very good morning to you. How can we help you?
Good morning, everybody. Yeah.
Good morning. Go ahead with your query.
No, the reason I bought Praj Industry was because it's the biggest player in ethanol, right? But we know that, it's simply not moving forward. So I have a significant allocation, more than 10%. I have 500 shares, roughly I bought it at upwards of 600 rupees, 620 actually. And I'm just thinking whether it's a good time to buy more and keep this for another 2 to 3 years, assuming that the ethanol story will play out. So I just want to get your views whether this is a good time to buy. I think the stock has corrected maybe 20% odd.
Right, got your query, Amit. I'll take this up with Rajesh. Rajesh, yesterday reports were suggesting that the ethanol blending target by 2030 is expected to be 30% now, which was 20% earlier, because we've already achieved that 20% blending mark by March 2025 or so. What's the view with regards to where Praj Industries is concerned? Should he add more at the current levels? He's holding 500 shares, bought at 620 a piece.
See, it's right that the news of 30% blending of ethanol in the 2030 onwards, but we should not forget that crude is trading at almost $60 odd, even below that. And OPEC has clearly said that they foresee a demand glut going ahead. So unless and until crude moves up, which would be a bad news for the entire country as such, because we are an importing country of food. But still, unless crude moves up, I don't think this ethanol story is going to be any big story in the near future, of course. So adding at this point of time won't be suggested. You can continue with your holding for a long period, because ultimately crude is going to go up, whether into 6 months or 9 months, that's a different story. You can continue with your stock. Putting new money, there are enough opportunities in the market. So I won't suggest adding at this point of time.
The view with regards to where Praj Industries is concerned. The next query is from Sumit, who's writing in from Bengaluru. He's holding 144 odd shares of BSC, bought at 803 a piece, and he's sitting on a significant profit of 7.3 lakh rupees. He wants to know for the next 1 year, what could be the target for BSC? And should he continue to hold or book some profits at the current levels? Vaishali, I'll take this up with you. 7.3 lakhs is an extremely big number to have, right now in his basket of profits. Do you think he should book profits partially? Do you think the charts are constructive enough right now for BSC?
So I would say BSC is a stock which one has to hold on in their portfolio. But even if he's looking at it to get again a fair entry, I would say book partial profit. The ideal level to again re-enter would be, because market will go through whipsaws. So 52, 5300 would be again another level to get into. And that way he can maximize on his profits, because long-term chart we are looking at 6,500, 7,000 target. So that is the way I would look at this stock.
All right, so that's the view with regards to where BSC is concerned. Our next caller, Govind, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Good morning, madam. Good morning, Alex.
Good morning.
Ma'am, actually, I have one small doubt actually. Due to this five-star small business,
Okay.
I purchased at the rate of, I think, 780.
Okay.
Current, because of there is no relation between the Trump tariff and all the things, this is the domestic business.
Right.
Can I add some more, ma'am, actually, for long term, for 2 to 3 years?
Okay, got your query, Govind. I'll take this up with Rajesh. Rajesh, we've been talking to experts, and everybody has a consensus call saying that right now the right way to play the markets is invest in domestic plays, and that is what Govind is also banking on. He's asking whether he should add more shares of five-star business Finance Limited, or do you think there are any other counters which are right now more attractive where domestic play is concerned?
See, there are a lot of domestic plays in different sector, maybe healthcare, hospitality, and other things. But since he's talking about NBFC company, five-star business finance, I think there are better opportunities in this sector only. For example, there is a Poonawalla which is trading at a considerably discount to what its value should be, or even Geo Finance, which have very good future plans going ahead. So these two companies are there into our radar. In the large cap space, we can recommend Bajaj Finserv, which is a holding company of Bajaj Finance, apart from which it holds insurance ventures and mutual fund and other things. So these are some of the better names in the NBFC space. As far as the five-star is concerned, you can continue with your holding. Maybe a 5-10% upside from these levels, that's almost 850, 4850 odd levels is quite possible. At those levels, you can try to exit.
Okay. All right. So that's the view on five-star. All right. So let's take Praveena's question. Praveena Mehta is writing in from Mumbai. She says she's a long-term investor and she's looking at possibly buying more of ABB, which she's bought at a price of 4,090. She's got 55 shares and she's already seeing considerable upside. The stock is up and about today as well. There is a fundamental development also, of course, for ABB, which is why it's up and about in trade today. But since it's a long-term question, I'm going to come back to you, Rajesh. And she's looking at a 15 to 20 month time frame for this. Should she buy more at these levels, in your opinion?
Yes, one can continue. These are strong companies, maybe ABB, Siemens, Cummins. These are all strong companies for long-term portfolio. They are low beta stocks, don't react to much of the market, but still, considering the fact that government capex has also started, and it's just a matter of time when capital private capex also starts. So these are companies which one can hold for long-term portfolio, not only 12 to 18 months, 6 months. One can even hold them for 5-10 years. So yes, one can add at these levels too.
You were making a point on ABB,
Global. So ABB Global is set to announce its results on Thursday, that is tomorrow. And generally, the commentary that comes in from ABB Global impacts ABB India stocks a lot. So that is something to keep an eye out for.
Certainly, and also I think the reaction today is because of the outcome of the annual report. Certain findings there are leading to a positive outlook for the months and years to come. So that's certainly something to watch out for. All right, let's take the next question. It's on Suzlon Energy. And we've got Nagakumar, who's writing in from Hyderabad, who's purchased 10,000 shares of Suzlon. It's doing absolutely nothing at this juncture, this minute, but he's seeing gains because he's bought at levels of 40 rupees and the stock is currently trading at 54. He says that he can hold for the next 2 to 3 years. Rajesh, very quick view, and then I want to go to Vaishali on the charts as well. If I'm not mistaken, you had said to take money off the table if you have profits, right, on Suzlon?
Still, I am with my view that one should book profit, switch to Tata Power or NTPC Green for that matter in the same space.
So Vaishali, from that perspective, since that's a fundamental view, at what level would you suggest is the best opportunity to book those profits? Do you do it in a staggered manner?
Well, actually, there's nothing really happening in this stock since a very long time. But I would say it can bounce up to 58, 60 and maximum to 65 right now. So these are the levels in different branches you can exit.
Okay, all right. So that's a view on both the fundamentals and technicals on Suzlon. And the reason I did that is because a lot of you have interest in this company. Kamath is calling us from Bengaluru. Hi, good morning, Kamath. How can we help you today?
Good morning, sir. Sir, I hold 2,500 IOL Chemical. I bought this before the split.
Okay.
My average price is 70 rupees. I wanted to know short term and long term, both of you, sir.
Understood. All right. And you bought this company, which obviously is in the chemicals and pharmaceutical space. What is the thinking when you bought it, Kamath?
No, they are, the leading manufacturers of Brufen, and the promoters were continuously buying the shares. So I thought they were increasing their holding. So I thought that there may be some good news coming in. That's why I bought it.
Yeah, you're absolutely right. It has a global market share of 35% apparently in ibuprofen, which of course everyone knows is the painkiller. And that is an absolutely important point that you've raised. It's an API, of course. And quite a few of these stocks, Rajesh, reacted sharply during this whole tariff turmoil, if we can call it that, because the thinking is that whatever is bad for China, which is a very large API manufacturer, is positive for India, and the large ones should stand to benefit. Is that the right thinking?
See, I differ with this view because I don't know what Mr. Trump is going to do, because as we all know, is a basically very erratic way of announcing things from his side. So I'm not sure that what comes next on pharma. But yes, the fact remains it's one of the largest player for ibuprofen, doing very well. API is doing very well. And when China factory is concerned, one thing is for sure that when China won't be allowed to do business with the US for the high tariffs and all, they may be dumping their products on other countries. So that would be a thing to see in future. Quantifying the benefits and losses at this point of time, it's a really difficult task. But as far as IOL Chemical is concerned, at this valuation, I think one can continue to hold for a target of maybe 70, 72 odd rupees, depending on the fact that status quo is maintained on the pharma sector from Mr. Trump.
Hold is the view coming in on IOL Chemicals. And of course, we'll have to wait and watch out for as to how tariff turns out for the entire pharma space. All right, the next query is on Mubin Mehim from Kerala, who wants to know as to what analysts are currently rating for Siemens India, and whether this is to hold, buy or sell. Vaishali, on the charts, how is Siemens faring?
Well, I would say all these three stocks, as even Rajesh gave his opinion on ABB. So I think all these three stocks, they are at a fair value. I mean, technically they are well placed, and I would say that once we see momentum setting in, it would get into a trend, and I won't be surprised if this goes towards 5,000 levels. So according to me, it's a buy at these levels.
Okay, buy for Siemens is the view coming in from Vaishali. Our next caller, Murli, is calling in from Bengaluru. A very good morning to you, Murli. How can we help you?
Very good morning to you. I'm first of all, congratulations for posting a excellent answering queries.
Okay, thank you so much.
Yeah. Number one, I bought 200 shares of Signature Global.
Okay.
The Gurugram-based real estate developer.
Okay.
At 1,118. 210 shares I bought. Now it is hovering around the same price, maybe around marginally profit.
Right.
considering the future prospects and they said to take up the growth in the next this year and last year and this year, with a higher ROE, EPS, everything in all formats, the exponential growth.
Right.
Can I add more, hold, or sell or switch?
Okay, got your query, Murli. I'll take this up with Rajesh. Rajesh, real estate has made a comeback in the past few days. Your take on Signature Global as well as the entire real estate space, because that is also one sector which has the domestic play, turning out to be in its favor.
Yes, it's a domestic play, and the second thing is RBI has started cutting rates. 2 instances of rate cut has already happened, and there may be more coming in the near future. So these are good things for real estate or even auto, which are interest sensitive sectors. But as far as Signature Global is concerned, I think there are better plays in the market. It is a newly listed company with a whole lot of projects coming up. But at these valuation, I think one should try to switch from Signature Global to better names like Cottage Properties or Lodha Developers, even Shobha Developers in a better space. So I think one should try to switch from these to that.
Okay, so that's pretty much a comprehensive view on the real estate space. By the way, Macrotech Developers gaining another 2.5%. It was gaining quite considerably in trade yesterday. If we can pull out the weekly chart for Macrotech, of course, yesterday the update that came through and the reason why the stock was up and about, there you go, so 11% or thereabouts, because the Lodha brothers have actually settled their dispute, which was a bit of an overhang on the stock. REC is the next counter that we're talking about. Gopi Krishnan is writing in from Riyadh, and he's holding 240 shares at a price of 293, and quite a few people are now on the fundamental basis turning positive on the likes of IREDA, the likes of REC and PFC. But I want to check on the technicals. Vaishali, on the charts, he's in the green and considerably so. Should he accumulate more at this juncture or should he wait for dips?
So I would say, well, 360 is a very prominent support in REC, but I don't know whether it's going to go down further on. So I would say accumulate at every decline because that's the way one should go around. Keeping in mind 330, 360 is a good support band, and hold on for a longer time because we have higher targets.
Okay, all right. So that's the view on the technicals. We've got Abdul calling us from Mumbai. Very good morning, Abdul. How can we help you today?
Yeah, actually, I had a query regarding Vedanta share.
Okay.
I purchased it at a rate of 479. Now it is down. So my viewpoint is I can hold it for 1 year because I had invested in for the sake of dividend.
Right. Okay. So if you've invested from the perspective of dividends, why only hold it for 1 year, Abdul?
No, actually, my aim is I can hold it more also. But the thing is that I wanted to know कि और नीचे तो नहीं जाएगा यार.
That's a fair point, and you bought a considerable portion. So I'm just wondering, the follow-up to that, of course, Abdul, is how much of this portfolio, how much of your portfolio does this account for?
Hello. Yes.
Yeah. So the follow-up to that, because you bought 10,800 shares, my query is how much of your portfolio does this account for?
Basically, I had it consists around 70% of my portfolio.
70% of your portfolio. Okay.
Yeah.
So, okay. So that's usually, and I'm going to let Rajesh answer this question, but that's usually not a great idea to do because you have considerable concentration risk when you take just one stock and it accounts for 70%. No matter what that stock is, even if it's an HDFC Bank or another very strong company. But Rajesh, what's your opinion here? Vedanta, 70% of his portfolio, over 10,000 shares, bought from the perspective of dividends. He's looking at holding for a year. What's the outlook?
See, you said it right. It's concentration risk, 70% of your portfolio in a single stock, and that too a commodity stock, which have cycles going forward. And not to forget the problem of China, where everything depends on them, whether metals will pay out or not. So these things are there for the entire sector as such. But going forward, I think Vedanta being a large play on metals, having almost every metals under their belt, even crude oil, things are very good. Fundamentals are strong. They gave out good dividend. They have announced demerger sometimes back, but due to some reasons, demerger has been postponed, I would say, if not stalled. So things are good. The only thing is Mr. Abdul is having a very large quantity in his portfolio that he should reduce. Maximum 8 to 10% of one stock should be there in a portfolio. That's 10 to 15 stock in a portfolio. That should be an ideal number, I would say, depending on one's risk appetite. But 70% is too huge. And to answer Mr. Abdul's question, Abdul bhai, नीचे जा भी सकता है, कुछ भी होए. So be careful.
All right, नीचे जा सकता है अगर कुछ भी हो, is you coming in from Rajesh on Vedanta. But yes, that's quite a comprehensive view that Rajesh has given on Vedanta. With that, it's time to slip into a very short break, but we'll be right back answering more of your queries on the other side, so stay tuned.
That's huge. That is a biggie. It's out of there.
Gold Plus Clear Glass. Far हो या near, सब कुछ दिखे clear.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Alright, welcome back. You're watching Ask Profit and we're in the midst of taking all of your questions. In fact, we've got Dheeraj who's calling us from Hyderabad asking about IREDA and the stock has been on a tear. Dheeraj, you must be quite happy, you must be smiling at the kind of gains that you've seen over the course of yesterday and today. What do you want to know?
Yes, sir. Actually, I bought the shares yesterday, 1,000 shares of IREDA.
Okay.
At 167 rupees a piece.
Okay.
So, can I hold it for the next 1 or 2 months? Or should I shift to any other company like Cube Investment or Vari Energy?
Yeah, okay. So it's a fair question. You bought it based on the anticipation that it will move up very sharply in the short term, right? It's a trading call.
Yes, sir. Actually, I thought that it will post a good result, so I bought it yesterday.
Okay. Okay. So, and you've benefited from that. In fact, incidentally, Dheeraj, we've got another viewer, Ashok, who's also asking about the same question, but he's not acquired the stock yet. He's wondering whether he can accumulate. So let me do this. Since both of you all have asked the question, first let me ask Vaishali on the charts. Vaishali, very strong move yesterday and today put together. What are the levels that you would watch on the upside, and where do you book profits? Dheeraj only has a view for the next 1 to 2 months.
So I would say the way the trend is setting in, for 1 to 2 months, it can go anywhere between 200 to 110. So that would be the level that he can book profit.
Okay. And Rajesh, you already spoke about, if I'm not mistaken, REC. I think I asked you a question on REC, but on IREDA, you must have seen the numbers. What do you make of it? It's strong numbers, but there's also this question about Gensol. Of course, I think that it turned NPA already last quarter. And so to a certain extent, we have to check whether or not provisions were made. But what's your view on the stock?
Yes, you said it right. The numbers were very strong. I would say it's better than expectation yesterday. And the only problem with Gensol that needs to be clarified whether it has been provided or not. Even if it is not provided, I think it's a very small percentage in terms of the entire AUM. So if it is not provided, there might be a knee-jerk reaction when the news comes in. But I don't think that would matter much to a company like IREDA, which is such a large AUM. But still, the fact remains it's trading at a much higher valuation when it is compared to PFC and REC, although they are into the same kind of operation financing the power sector. But yes, IREDA has something different that it focuses on renewable energy, which is the in thing. But still, the fact remains the valuations are high. Somebody is trying to put new money, I would always prefer going for a PFC or REC rather than going for IREDA at this point of time, although it's a good company. So you're sitting on a profit, took a position for a short-term book profit and try to get out. For any new investor which is trying to buy, I would say wait for some more correction, maybe 160, 150, 160 odd levels if it comes by any chance would be a better levels to enter.
Right. Just Alex was mentioning, and it's interesting to mention this today because Gensol, we're seeing significant moves in that particular stock, and 0.8% of IREDA's total book is lent to Gensol Engineering.
That's the exposure.
That's the exposure that IREDA has. Moving on to the next query, Prakash from Chennai is a long-term investor, and he's invested in IRCTC, and he's invested it for about 4 to 5 years at 264 rupees at 290 a piece, and he's bought 264 odd shares. He's sitting on a profit of 1.24 lakhs, but what he's saying is that in the past 2 years the stock has not moved much, and he wants to know whether he can stay invested or exit and look for other growth or dividend stock. Rajesh, I'll come to you on this one. Is IRCTC a good counter to keep holding, or should he switch?
Even we are very surprised, despite being strong fundamentals, all the divisions are doing very well, be it catering, rail, near, ticketing. All three divisions are having almost monopoly, rather monopoly on their business. Only the travel and tourism is not monopoly, but that also is doing very well. Debt-free company, giving dividends. Everything is in their favor. The new launch of new train, whether Vande Bharat or Tejas, is a big positive for IRCTC. They have tied up with Zomato, going for full coach booking, going for outside catering, but the stock is not moving. It's something of a classic case. If Alex would remember, ITC was not moving for such a long period of time. For a long-term investor, it's a hold from our side. Even it's a buy at these levels if somebody is ready to hold for 12 to 18 months. So that's my opinion. It's a very good company. Continue to hold.
Okay, so you're clubbing, you're looking at IRCTC in the same light as ITC. Am I getting that right, Rajesh?
See, not exactly same, because ITC used to give good dividend. The dividend it was around 9% in those days. So that was better than FD return. And I have compared but ITC with a FD for investors. So I can't compare that in that way. The only thing it's not moving at this point of time, maybe a long period of consolidation. After some time, it will move because the fundamentals are very strong and some fundamentals would take the front line.
Okay. So that's a view on IRCTC, and we've got our next caller, Alex from Kerala. Alex, it's lovely to speak to my namesake. Good morning to you, and how can we help you today?
Good morning, Alex. I am coming again.
Yes, of course. Please go ahead. What's your question?
I have a query on TI India, Tube Investment. I am holding at a 2729, 18 shares.
Okay.
I need a fundamental view on this. I bought it around 2023, that level. It's in the same level at 2023. Whether the valuations is very high or that their growth is justifying this valuation. Because their growth perspective is showing in that one. It's looking like its valuation is much higher, but it is justifying their growth. That's what.
Okay, so I get your question, whether or not, and whether to hold on is a question, because you've had tremendous patience, not anything else. Patience is the word that I was looking for. Rajesh, he's had patience with the stock, but unfortunately, it's not really rewarded him. Would you hold on for the long term?
Yes, of course I would hold on. Belonging to the Murugappa Group, it's one of the very good companies. The group is very good. They're doing very well. It's only thing is the market has not done anything for this stock for a long period of time. That's because of the fact that it has run up quite a lot in the last 3-4 years. It's just consolidating at these levels. With the kind of numbers it has been giving in the recent past, I think it's just a matter of time when it goes towards 3,000 odd levels. Continue to hold.
All right, continue to hold. Tube investment is the view coming in from Rajesh. Rajesh, I'll stick with you for the next question as well. Purvi from Ahmedabad wants to know 3 stocks from a longer term perspective that are good to invest right now. What are these 3 picks that you have in your basket?
See, it depends on your time horizon. If your time horizon is more than 18 months or 24 months, then I would say go long on, in the large cap space, go long on Reliance, Larsen and HDFC Bank. In the mid-cap space, you can invest in maybe a IOC or a Bank of Maharashtra, even Blue Jet for that matter.
Okay. Okay, so we've got Suresh calling us from Hyderabad. Hi Suresh, very good morning to you. How can we help you today?
Hi Alex, good morning.
Good morning.
Alex, I am holding the Motilal Oswal shares at around 80 rupees, 80 quantity at
right. 625, yes.
Yeah, 625. I am having enough profit, but can I add more shares now, around 200 or 300 more quantity now for a longer term, 1 to 2 years? I have been observing this one, and it has fallen from around 1,000 rupees to 600.
Yeah.
So I think in decent fall. And overall, what is this AMC sector? How it will be perform in next 1 to 2 years? So just I wanted to know.
Okay.
Because I have invested in UTI AMC also.
Okay, that's a fair question. Suresh, Rajesh, I'm coming back to you on this one because at last count, at the end of March, you had assets under management for the mutual fund industry at about 65.7 lakh crore rupees. And I was looking at the trajectory over the last 5 years, which accounts for the kind of rally that you've seen post-COVID-19. And the assets under management have grown at 24%, more than 24% compounded. Even if they grow at half that rate over the course of the next 5 years, they're going to double to about 120 lakh crore or thereabouts, right? So what are the prospects for Motilal and the sector as a whole?
The sector is very exciting, I would say. The entire space, be it stock exchange like BSE, NSE of course is not listed, BSE or players like CDSL, even CAMPS, these have very good long-term story, I would say, going forward. Even the EMC companies would be the beneficiary because of the kind of mentally thinking that has been changed in the mind of investor from savings account to mutual funds, SIP, that's a big change that has come in the entire sector, I would say. We have seen number of banks coming out and saying that saving deposits have gone down just because of mutual fund investments. So these things are very bright for the entire sector as such. Motilal Oswal being one of the players into that. We have a target of around 800 odd rupees in this stock. So I would say continue to hold. As far as new money you want to deploy, I think you should better deploy in a stock like BSE, despite the fact that it has run up quite a lot. From the levels of 500, which we started recommending, it's come to almost 6,000. But I think if the equity scenario is going to be there, BSE is going to be one of the biggest beneficiary. To be with that.
Be with BSE is the view coming in from Rajesh. The next query is on Cyient Limited. Sudhir is asking this query. He's bought the shares at the levels of 1407 and he's bought 240 odd shares and sitting on a loss of roughly 51,000. Yes, there you go, 53,000 now. He wants to know whether he should hold or sell at the current levels. Vaishali, I'll come to you. What are the charts indicating for Cyient Limited?
Actually, all these stocks, KPIT, Cyient, they all have taken a very good beating. In fact, the whole IT index. But in my opinion, all this is very cyclical. And technically, if you were to ask me, this is a fair level. Average out your cost, buy at these lower levels. And once the stock starts picking up, you will see good returns coming in this stock. So if 6 months is the horizon, please continue.
All right, so if 6 months is the horizon, buy is the view coming on Cyient Limited. All right, our next caller, Shrikant from Hyderabad is calling in. Shrikant, a very good morning to you. How can we help you?
Madam, good morning, very good morning. Madam, I have bought IRB Infrastructure around 46.06, 35,000 of share.
Okay.
Can I hold it?
Okay.
It's a short term. It's a short term. I bought it for short term.
Okay. All right.
Recently, I seen that last month, March month results are very good of full connection. That's why I purchased that. Can I hold? Please suggest.
Okay, got your query, Shrikant. I'll take this up with Vaishali. Vaishali, what are the charts indicating for something like an IRB Infra?
So, well, it's just consolidating, but if it's purely on a short term, keep a stop loss of 45 and look for a target of 48 to 50. So that would be my view for a short term perspective.
Okay, all right. The next one is a long-term question. It's from Sarat, and specifically for you, Rajesh. Fino Payments Bank, for 1 year or more, he's looking for your opinion as to whether or not to do this. The stock is at 257. It's up and about in trade today, over 3% gains. What's the view?
See, we are not very excited about the entire space at this point of time because of the numbers, the asset quality and all those things. It's better to switch to a full-fledged bank, maybe HDFC Bank or Axis Kotak, which we recommended in our show today only. So that would be a better option to go for.
All right, so that's the view with regards to where Fino Payments is concerned. Our next question is from Sai, who's writing in from Andhra Pradesh. He's holding 200 odd shares of Mahindra and Mahindra at an average price of 2598. He wants to know whether he should hold, sell or buy at the current levels. Vaishali, with respect to the charts, how is Mahindra and Mahindra faring?
Well, if it's purely for a short-term perspective, there's really nothing much happening. But if he's ready to wait, I mean, continue holding, we can have a target of 3,000, 3,200.
Okay. The next caller is from Noida. Sanjay is calling us. Sanjay, very good morning to you, and how can we help you today?
I had recently bought Shilpa Medicare around 1.5 months back.
1.5 months back.
I had 90 shares around 745.
Okay.
So I like to know future outlook for next 6 months to 1 year.
Okay.
And if Rajesh Garwal said I can add more, so can I specific from Rajesh Garwal?
जी आप जरा हमसे ये explain करना कि why have you bought this? ये क्या इरादा था तुम्हारा? And when you bought it, what did you look at? आपने क्या देखा था?
मैंने कुछ नहीं देखा. Really बताऊं तो someone has said me to pick this.
So suggestion था buy करने का. Okay.
Yeah.
Rajesh, on the fundamentals, then would you care to opine on Shilpa Medicare? And I'm pretty sure that you're not going to be as tongue-tied switching languages as I am.
See, switching languages, I don't think that would be much of a problem because you speak it. But as far as Shilpa is considered, I think one should consider holding this stock for a longer period. By longer period, it means at least 2 to 3 years. Company is doing very well in the oncology segment, and they have come out with new drugs, and then the API has been doing well. The numbers have been improving in the recent past. I think the target of maybe 900 plus rupees in the next 2 to 3 years is quite possible. So थोड़ा सा अपना टाइम होराइजन बढ़ा लीजिए और कंटिन्यू करिए और कोई भी गिरावट आती है वो ऐड कर सकते हैं.
क्या बात है, wow. All right, I need to take some lessons from Rajesh. All right, 361 WAM is the next counter that we're talking about. Is a stock that is gaining quite considerably in the recent past. I don't know what it's doing today. Okay, finally cooling off a little bit. But let's pull up the 1 week chart for this company, for the stock, and it's done particularly well. So we've got viewer Ashok, who is asking about this, bought at levels of 946, so slightly elevated levels. The stock, okay, so it's up about 9% for the week there. So I'm not wrong. Vaishali, on the charts, what is the upside potential? Can he recover his buy price? And upside potential beyond that as well?
Yeah, so I think keep a support of 900 and upside near-term target I would look at is 1050. So that would be the bounce back that I would see for now. 1050 is a cluster of resistance coming in. So I would say that that's a level to watch for.
Okay, so that's the view with regards to where 361 WAM is concerned. Our next caller, Rajesh, is calling in from Bengaluru. Rajesh, a very good morning to you. How can we help you?
Hello, good morning. Hi, this is Rajesh here. I'm having Sona Comstar shares of 190 shares.
Okay.
I'm looking for long-term horizon and buy price is 524 rupees.
Okay. Rajesh, I'll come to you on this one. Sona Comstar, I believe, is the counter that he's talking about. What's the views with regards to that counter, and from a longer term perspective, do you suggest to hold?
It's a hold from a side at this point of time. It's a strong play on EV. A large part of their order book comes from EV. But the problem is a large part of order book is again from US, where we have seen the kind of Trump tariffs going on. And I'm not sure that whether the pause given for the auto sector at this point of time is continue for how long. So that's the only problem. Otherwise, the company is doing very well. Strong order book catering to EV. If nothing happens on the Trump side, I think these are levels to accumulate these stocks. So high risk, high gain type of bet. At this point of time, what I can suggest is continue to hold.
Continue to hold Sona BLW. It's had quite the wobbly few trading weeks. But continue to hold is a view from Rajesh. Bajaj Housing Finance is the next counter that we're talking about, and Mahindra Raj is writing in from Jaipur, and he's bought at a price of 135. Quantity is 800 shares. The stock is up and about in trade today, but he's wondering what to do from the long-term perspective. Rajesh, I'm coming back to you on the fundamentals. If I remember correctly, 25% assets under management growth in the fourth quarter. I can't recall exactly, but it was decent. And would you continue to hold this? Would you add more?
At this point of time, yes, it's an add from our side. Company is doing very well. You said it right. The CAGR growth in asset under management is phenomenal. I would say it's one of the best in the industry, if not the best. Valuations are also okay. It's a buy from our side. You can even buy at 130 odd levels that's trading at this point of time for a target of maybe 20-25% upside in the next 12 months.
Okay, 20% upside. Okay. All right. And stock is already up and about. Today, it's 85% above its issue price. All right. Sanjeevi is calling us from Chennai. Hi, Sanjeevi. Good morning. And how can we help you today?
Hi. Good morning, guys. Thank you so much for having me. Just a quick question to everybody on the panel. So I'm currently holding Asian Paints, which I bought at around 2,700 about 2 years ago. Should I continue holding it, or is it a good time to average out and buy some more and expect an upward trend to happen because the crude prices have crashed? And does it look good for Asian Paints at this moment, or generally any paint stocks?
Okay. Can you help me understand what the time horizon you have in mind is for this stock? Is this a portfolio stock, Sanjeevi, that you're holding?
That is correct. Yeah, I'm looking at a long-term gains over here, at least 3 to 5 years.
Got it. All right.
I don't plan to sell it.
Do you by any chance have any other paint stocks that you're holding?
No. This is the only stocks. This is the only one that I'm holding.
Got it. I understand.
Other crude-related stocks, but my question is specifically for paints.
Oh, you have crude-related stocks as well, downstream companies?
Yes, I do. I do have some Oil India and some ONGC.
Okay.
But largely my question was for Asian Paints because that's where I'm sitting on losses.
Got it. I got your question, Sanjeevi. And it's a fair question to ask because a lot of long-term fundamental investors are asking this question. Rajesh, patience with Asian Paints has not been rewarded. And a lot of people are wondering, should we finally pull the plug? And what is your opinion here?
See, I would say try to exit on any upside because as we have seen, Q3 numbers were pretty bad. That was below expectation on every parameter, I would say. And I don't believe there would be any reason to believe that numbers are going to improve in the near future as such, despite the fact that crude has crashed. But we should not forget that once almost a monopoly of Asian Paints, despite the fact that it was not a monopoly, but still it had a fair large number of market share. Now there are a lot of new players. Builders have come in, JSW is coming, Astral has come in. So that competition is heating up. So that is going to take away the premium that Asian Paints used to command. And even after these kind of corrections, trading at a high double-digit PE, so that the valuations are also stretched. So at this point of time, new addition is out of question. Any upside should be taken as an opportunity to exit.
All right, a quick view on Anantra is being sought by Sunita, who's writing in from Hyderabad. She's bought at levels of 460 rupees a piece. Vaishali, on the charts, how does it look?
So I would say Anantra is one of the good companies. Even if I'm looking at the weekly and the monthly chart, it has come towards support. So right now, I think if he's holding, continue hold. And even if he wishes to add more, these are the levels where take the opportunity to add more and look for higher targets, at least to 700 to start.
Okay, all right. It is time now, the both of you, to get into the rapid fire segment. This is where we throw as many questions at you as you know over the course of 2 minutes. I will start with the first one from Kusuma, who's writing in on Torrent Power for the next 6 months. She hasn't bought yet. She's wondering whether to do so. Any price targets that you have on the charts, Vaishali?
So buy in decline. This is not the level to buy. Around 1500, 1550 is the level to buy. Look for a target of 1750 if 6 months is the horizon.
Okay, Shubh Sharma from Jharkhand. He's saying his father had bought 2,000 shares of Indigo at 750 a piece. Now the stock is trading at 5,200. Should he sell or hold? Rajesh, what's the view like?
If your funds allow, you can even add.
You can add more. All right, yeah. There's a reason why some people are calling it the best consumption play. Gale is the name of the counter we're looking at next. Invested for 4 years is Wilfred. He's gaining profits of about 82% and he's wondering whether to increase his holdings. What's the view, Rajesh?
Good profit.
All right. Vodafone Idea bought at 10 rupees a piece, bought 1,600 shares. Exit or hold? Vaishali?
Exit.
Okay, Sudarshan Chemicals. Lakshmi wants to know, she's bought at levels of 1,137. Hold, sell or add on dip. Rajesh?
Hold.
Okay, Sumit has bought 104 shares of CDSL at 900 a piece. He's a long-term investor. Should he hold or sell? Rajesh?
Add.
Okay, Vinita from London is asking about PCBL. 413 is the buy price. She's got a long-term view. Rajesh, should she hold?
Buy more.
Okay, Raghu from Bengaluru is asking about Tata Technologies. He's holding 700 at an average price of 873. Vaishali, what's the view with regards to charts?
Hold.
Outlook on the hospital sector is being sought. 50,000 wants, Lavanya wants to invest. What should she buy is a question, Rajesh?
A lot of stocks. You can go for Narayan Hirdalaya in the mid-cap space.
All right. Sanjay Acharya wants to know if he should continue to hold Tata Motors. He's bought at 986 levels. Vaishali, on the charts?
Hold.
Hold. All right. Thank you to the both of you, Rajesh as well as Vaishali, for joining us today. Absolute pleasure, as always, having you on the program. All right. Well, that brings us to the end of this edition of Ask Profit. We've discussed a lot of stocks. Hopefully this has helped you.
You need to get some sleep.
I need to get some sleep. All right. But thank you so much for joining in. We'll be back tomorrow to take more of your questions. So do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company.
Hello and welcome. You're watching KYC. It's a show designed to give you powerful, actionable insights into a single listed company daily. And today we're going to talk about Insecticides India. Interesting company per se. It's in the agrochemicals and biological and household products, more into crop protection and nutrition based in that sense with regard to what the company does. It has a portfolio of 20 plus technical products and 125 formulation products. Largely products are surrounding insecticides, herbicides, fungicides and biological products. So those are the four broad based categories of the products that the company does. In terms of domestic, a large part of the sale comes, or rather the large part of the revenue comes from domestic, but it exports to 30 countries with more than 100 customers and also commands a decent amount of an export base in that sense because of the number of customers they have. In terms of revenue mix, and this is where it's interesting because you'll see the skew in revenue being very, very sharp towards insecticides and herbicides. Combined commands 87% of the company's revenue. So look at insecticides is 48%, herbicides is 39%, and then fungicides and biologicals are just about 10 and 3%, so 13% in all. The one big thing that has happened, especially when it comes to an Insecticides India, again a very interesting piece here, that they've moved towards premium products. So their premiumization trend from FY21 to FY24 in the 3 financial years has gone from 46% to 59% in terms of premiumization of product. So therefore generics now starts to command a lower share. This particular trend may likely continue even going forward. The question is, what is the impact of this trend on the P&L, and we'll analyze that when the income statement comes up within our metrics. But essentially this is something that you may want to keep in mind. The other thing is how is it playing out segment wise. So B2C, which was 65% in FY22, is currently at 82%. B2B, which was 26% in FY22, is currently 11%, and exports is still roughly single digit. So that's the segment wise breakdown. Again, why is this relevant? B2C will always command a better amount of margin and therefore is more favorable to an Insecticides India. Can they continue to make that journey? How much can they continue to do that is really the interesting question, and we'll speak with management to try and get a perspective at the end of everything that we are going to speak about ourselves. We'll speak with Rajesh Agarwal, who's the Managing Director at Insecticides India, to also dive deeper and understand this better on what he believes the journey of the company will likely be. But let's talk about metrics as we always do. We'll start off with the income statement and thereafter the balance sheet, the cash flow and the return ratios. We'll keep those common on most companies. So that's how the parameters will stack up. Thereafter we look at shareholding, street cred, valuation and outlook and risks. We'll also look at the risks to the outlook. That will be important to understand. And we'll give ratings on each of the parameters. But Varsha Chandani joining me today morning to try and help dissect this company further. Varsha, income statement with regard, first off, Insecticides India, do you have maybe a thought or two with regard to the business itself?
Yeah, so Harsh, every company has a next leg of growth, right?
Sure.
For insecticides, it is the next leg of growth for this company is the premium products that they are trying to cater to, higher margin products, value added products, which will actually help build up their margin. So this is basically the next leg of growth, and for that they are also doing capex, which will actually speak when we will address the outlook and of course the capacity expansion that the company is going through. But let me just go to income statement. Now if you see, for the last 3 years the revenue CAGR for this company has been like 11%. But if you see in 2023, so in 2022, the revenue for the company was around 1,504 crores, which jumped up, and in 23, it did jump off at 1,801 crore. And the reason why you're seeing a huge spike in FY23 was because of the capacity expansion that the company did and the new product launches that the company had come up with in 23. However, if you see the margins for the company, margins declined to single digits. Now this is due to, so there you go, from 11% in 23, the margins came up to almost 7%. Now this is due to higher input cost that the company was facing and also the higher inventory liquidation. So what exactly happened, if you see, there was a pricing pressure in the industry. There's still pricing pressure in the industry, and a lot of agrochemical and chemical sector which has gone through, and you're seeing the financials for the company has been very, very weak because of the pricing pressure that the overall segment is going through. So for insecticides, you had this inventory in the balance sheet which was sitting at a very high price, and because of the agrochemical pressure, the chemical pressure that the industry was seeing in, the end product prices were very low, which actually impacted your sales and which actually impacted your margins, because you were buying at a very high price, the raw material you bought at a very high price, and the end product you were selling at a very low price, which actually impacted your margins. And that's why we are seeing the margins at almost 6.3, 6.8 or 7%. Now, so overall, you see, Harsh, the growth for this company has been slow, like 11% CAGR. Of course, because of the industry dynamics, the pressure in the agrochemical sector. But the one thing which we should actually ask the management, because we have seen that you were talking about, the increasing premiumization, but that has not led to increase in margins. That's the one question, that we should be asking to management.
Yeah, so we'll contextualize that, and thank you so much for giving that perspective as well, Varsha, that margins haven't bounced back despite that premiumization. Something to be kept in mind. Let's look at the balance sheet now. Shareholders' equity plus reserves would roughly be 1100 crore. It's a 2000 crore market cap company, so trading at 2x price to book. You're looking at long-term borrowing, which is probably less than 65 crore. And or rather long-term plus short-term less than 65 crore, and therefore the cash surplus that the company actually has is more than both the long-term as well as the short-term borrowings, which kind of nullifies any major risk that could affect this company. Plus, on top of it, have to keep in mind that the market capitalization of the company is 30x of the cumulative borrowing, and the EBITDA number, annualized EBITDA number, is nearly 2.5 to 3x that of the borrowing number, and therefore enough margin of safety, enough comfort with regard to how balance sheet strength looks. Capital allocation seems to be happening okay and largely from retained earnings, and no borrowings are currently being used. Efficiency of that we will leave to the viewer because it's a cyclical business, and therefore something to be kept in mind that large borrowings on the balance sheet of companies like this can well impact the numbers, especially profitability, in years in which there is a bit of a slowdown, which it has experienced in FY22, in FY23, and to a certain extent in FY24. Am I right, Varsha, when we look at it this way, that generally a larger debt on companies like this especially can pose a very large risk because it's a cyclical business?
Exactly. And so the good thing is that, as you mentioned, the debt to equity ratio for this company is really low.
Yes.
So that is the advantage that the company has got, considering the pricing pressure that the segment is going through.
Fair point. What about cash flow, Varsha? How is that evolving?
So I would say it aligns with the income statement, first of all. And the other thing is, if you see, if I strictly speak for FY24, the cash flow from operation was around 184 crore, while the net cash flow is 43 crore. Now, if you see in FY23, cash flow from operation was negative 11 crore. Now, one of the reasons is because the company was sitting at a huge inventory. Your cash was stuck in inventory, and that's the reason you're seeing this negative cash flow from operation. And the net cash flow, of course, was negative 17 crore. But overall, if you see, because in FY23, as we spoke, that the company had a huge growth because it did a lot of capacity expansion, was going into a lot of capacity expansions, and also, and this is the reason you are seeing, you know, one is inventory. You were sitting at a very high inventory, then capacity expansion was going on. So that 1 year was very negative when it comes to, you know, cash flow perspective. But in FY24, if you see a good cash flow from operation at 184 crore, and you know, finally net cash flow at 43 crore. So we would give a kind of neutral rating for this segment.
Point taken. What I'm not liking though, Varsha, is the return ratios, and I've given this a thumbs down from a perspective that when we're looking at how the return ratios are playing out, we're seeing the ROC numbers at roughly 14 to 16% in FY21 and 22. Thereafter, we've seen a blip, and we've seen them remain there. So it's been anything between 9 to 13% on the ROC metric. The ROE numbers look even weaker in that sense. You're seeing around 7 to 11% ROE with FY21 and 22 looking not even at teens in terms of the ROE number. What you would want from a company which is small is to be high ROC, because you want it to grow quickly at a very, very good return to equity and return on capital employed. That is not reflecting fully at this point on an Insecticides India. To a certain extent, because of the industry in which it operates in, to a certain extent also because of some headwinds that have come through, the question will be that can they hit at least a basic early teens kind of ROE number? That will really be the question. So for now, we're going to give this a thumbs down, because it continues to invest capital of shareholders back into the business, right, Varsha? It invests straight back into the business, doesn't use debt to invest in the business, and therefore you want it to get better return on equity for shareholders. If it's not doing that, it may not be the ideal business to invest in, you know, unless Harsh, it's at the right valuation.
On that point, I think in FY25 also you would see some kind of compressed return ratios, because they are going for the capacity expansion. So again, high denominator and lower numerator. Yeah. Perfect.
So there'll be a pullback there. But Varsha's shareholding.
So we would give a thumbs up on that matter, because promoter, now skin in the game, that's very important when it comes to any company. 72% stake by promoters, which is very good. FIIs at 4.5%, though they have decreased their stake, but still okay. But what interesting here is DIIs, which has almost 9.5% stake. Now, from this, almost HDFC small cap has 9% of stake in this company, while, you know, public has almost 14% of stake in this company. So good promoter holding, and of course followed by DIIs and FIIs.
Yes, interesting one, that one. Let's look at street cred as to how the stock has done. You know, over the last month or so, while the stock has done fairly well for itself, markets have been buoyant as well. When we're looking at the year-to-date data as well as the data when on the, there you go, that's the 1 year performance, which is roughly 12% odd. You're looking at return ratio which is slightly on the muted side, even when we're looking at the 5 year performance, just about a 2-bagger. So overall, we're giving this a neutral because of the way in which the stock has moved. Last 6 months has been difficult. Last 12 months, not as bad. Essentially, it's done fairly well for itself. And the last month or so and year to date also, month or so has done well, but year to date has been muted. That's how it's played out on this one. We'll give it a neutral. But Varsha, on the valuation picture.
So, you know, Insecticides India trailing at what, 14 PE appears compelling if you compare it with their peers, that is the Dhanuka Agritech and Sharda Cropcom. Now, if you see I would say a recovery is expected. Now, this is on the back of ramp up of new production and also increased share of high margin products, which will eventually lead to higher EBITDA margin and of course higher profitability, and also the acquisition that the company has done will impact their profitability in a positive way. So overall, if you see valuation at 14 times doesn't seem a kind of a premium valuation, but you have to consider three things, you know, while evaluating this company. One is the higher exposure to premium products should lead to, you know, higher margins, and how the capacities expansion will play out for the company, what would be the capacity utilization that the company is targeting into, and of course the new products that the company is expecting. I think 10 new products is expected in FY25. So all these factors will actually lead to a valuation re-rating, considering the demand, the positive demand that all the you know, agrochemical companies are expecting.
Yeah, a possible valuation re-rating, Varsha. I'll just caveat it at that, but a 30% discount is significant. I take your point on that. Let's look at what the outlook looks like, and Varsha, please chip in, because you know this maybe better than I do. Let's talk about premiumization strategy. There's a premiumization strategy which is in place. It's going to contribute around 65%. Premium product is going to contribute roughly 65% in the next 1 to 2 years, which is currently at 59. It's better margins. They're going to grow premium products at around 20%, which is very, very healthy. You have new launches in the pipeline, and you have an aspirational EBITDA margin of 12 to 13%. Now, help us dissect this. Is this realistic? What are the risks looking like to this commentary?
So, on that margins front, you know, when I look at the trend, Harsh, when you are increasing your premium products, there has to be increase in the margins, which the company has not seen. But
and the B2B to B2C shift as well.
Exactly.
Those two things.
Two things. But I would give a benefit of doubt, considering the, you know, pressure that the company has been going through. But one thing is that if premium products are increasing, your margins have to improve. Number two is, you know, the launches that a company is going into. We need to see, because 10 launches were expected in FY25. We are in the last quarter. Hopefully that those 10 products would have been launched. And the third thing is, the acquisition that they did will actually impact their profitability in a in a positive way, and that's one of the reasons why company is expecting double-digit growth, rather double-digit EBITDA margin. But you know, the key risk that any agrochemical company faces is, one is of course poor demand and the delayed product launches that the company may see, and volatility in input costs will actually impact company, which they've seen the impact. And lastly, the pesticides ban, if government can consider, which may impact the company in the future. So these are the three main risks that the company may go through.
Perfect. Point taken. Let's quickly go across, before we go to management, look at what our KYC rating indicates with regard to this one. That's how we stack up in terms of our first 4 metrics, the next 4 as well. There you go. Those are our next 4 metrics, and therefore we stack up on as a 5 on 8 with regard to our KYC rating for an Insecticides India. Let's go across to management. Let's speak with Rajesh Agarwal, Managing Director at Insecticides India. Sir, you know, a lot of our analysis also has hinged on the fact that there's been plenty of headwind for the industry as a whole. Talk to us about the unwind of that headwind, because we are seeing that as it plays out. How quickly can that happen, and how should your numbers therefore appear in FY26 from a growth perspective, purely from a top line perspective?
Okay. I would say that a big change has come in these past 2 years, because after the COVID had gone, the prices of all chemicals had declined, and we had to face that impact. And we are out of that impact fully in FY24 itself. And 25 you'll see the improvements. I cannot declare the numbers because the results are yet to come. But I'll say that we'll have the all-time highest profitability in FY25. And this thing is going to continue in FY26. In terms of the top line growth, yes, we will be targeting a good top line growth in FY26, roughly about 15%. And majorly this entire top line growth, the target will be to bring it from the premium products itself. So that is the focus as a strategy. And I believe that the response which is looking for the season, the response which is looking for the products, what we have launched in the previous last few years is very good. And looking at that complete situation, I believe that we should be able to do this.
Right. Sir, Varsha here. Very good to have you. So as I understand, so the next leg of growth for Insecticide India is, you know, premiumization, which you are expecting 20% growth also. Just wanted to have an update on it, because over the years, you have been seeing the contribution of premium products going up, but that is actually not coming into your EBITDA margin. So just wanted to understand, with this 20% growth and with the contribution that you want to take your premium products to, what kind of EBITDA margins are you expecting, maybe in next 2 years?
We'll keep on moving up step by step. I don't want to give very hefty numbers, but I'll say that we'll make a full recovery. In 25, we'll be happy with our results. In FY 26, it will be evident from the first quarter itself, and all our quarters will show good performance. I am confident, and we can say that 10 to 15% type of growth will keep on coming in the next 2 years. So we can say roughly about 1.5% type of growth is possible actually in this FY 26, and should be possible in the next year also.
Got it. And also one more question from my side. Considering your export business, I guess it's 8 to 9% export contributes to your overall business. Now, where you want to take this contribution to? Will you have a double-digit growth when it comes to export business in 26 and 27?
Yes, that will be, because we are working with many companies. We have started bagging some registrations. Very recently, we have bagged some registration in South America, and the business is going to start. So that will take us to the next level. And we are also having some like transactions are on, discussions are on with a lot of Japanese companies also. I see a breakthrough from there also. So I see a good outlook. This year, we'll be keeping our high growth targets for the export business. We wish, like we have been doing about 100 crore plus of export business. So this year, we wish to take it to about 200 crores.
Understood. Mr. Agarwal, you seem to be suggesting that Q1 of FY26 onwards, margins will take a sharper rebound. What are the levers that are giving you that comfort that margins will rebound? What has changed between FY25 and FY26?
We had launched a lot of products and we have got very good response. Most of these products are herbicides, particularly the maize herbicide, the rice herbicides, and we have got herbicides for almost every crop, and we are the brand leaders, even in soybean, in pulses, in sugarcane. We have got good solutions. In wheat, we have launched solutions. So we are backward integrating, making the AIs by ourselves, launching the brands, and also we have launched certain mixtures, which are the patented mixture. So that is giving us the edge. And very shortly, we are going to launch one product of Nissan also, which is going to be a rice herbicide. So that is also going to give us an edge. And in the previous year also, we have launched one rice herbicide, which is a mixture, patented mixture, which has already gone to the market. So looking at our premium products, I am very, very confident that we'll start getting the sales from Q1 itself. And this is going to remain throughout the year, because Q1, Q2, Q3, we have products for all. And we should get very good response from the market. That is my assumption.
Understood. So how should we look at the journey here, sir? You'll grow roughly 20% in terms of your premium segment, right? That will grow at roughly 20%. Top line is your guidance. You'll go towards a double-digit kind of margin in FY26 and thereafter move towards 12 to 13%. Where will premium products be in terms of the overall mix, therefore? And how much does premium and B2C contribute? What are the margins like on those products versus the others?
Like the premium products are the ones which are giving good margins. Roughly, if I talk about the gross margin, not on EBITDA level, that will be about 35%. And B2C can go up to 75, I will say, in totality, because what you were showing on the in the graph was 1 quarter figure. So generally, the B2C sale, B2B sale is also strong in Q1 and Q2 and Q4. Q3 is subdued quarter actually. So in totality, we see the B2B contribution would be something around 25%. 75 or 70% will be coming from B2C, and export will be contributing somewhere about 6, 7, 8% actually. So this will be the tentative percentage.
Understood. Also, you have one automated plant which is coming up in Rajasthan, which you have done a significant investment there. Just wanted to know what are the timelines of the completion and how this will impact your top lines, and when can you see the financials coming in from this plant?
The target here, it's a place called Bhairod. The specific place is Sotanala Industrial Area. Here we have taken over a 15-acre site. The plant is under construction. The target is that we wish to start the formulation in this plant in April 26, and in next 2-3 months, in the Kharif season itself, we wish to start with the technicals also. Yes, this will be DCS plant, and we are working on this, and I'm quite confident that we should be able to complete this project within 1 year.
So one last question on how should we look at this. So around a 15% top line growth with roughly a 10% kind of margin would lead you to around 200 to 300 crore of EBITDA over the next couple of years, 250 to 300 if I were to be more specific. And thereafter, if I cut out depreciation and taxes, that will leave you with a PAT of roughly 150 crore. Is that the right way to look at the journey, or maybe over the next year or two in the near term?
I don't have the results, but that will be my target for FY25, not 26. So 26 will surprise you with our results, and the results will be evident from Q1 itself.
Okay, noted, sir. Thank you so much. It's been a pleasure speaking with you, and great getting that context from you with regard to Insecticides India. But you know, on that note, from Varsha, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in?
What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims? Know your company.
Powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims? Know your company.
Powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. Once hailed as a rising star and stock market darling in India's clean energy space, Gensol Engineering is now back in the headlines for all the wrong reasons. What has happened with Gensol is a story of bold promises of a cleaner future, which has now descended into a murky tale of financial mismanagement and misused funds for personal extravagances. The latest blow came from SEBI, which has now barred promoter brothers Anmol Singh Jaggi and Puneet Singh Jaggi from directorships in the listed companies, stopped the company's planned stock split, and named a forensic auditor to investigate the matter. The regulatory action comes after a probe triggered by a complaint from June 2024 about share price manipulation and fund diversion. What SEBI has uncovered is some damning details. Backed by loans worth nearly 978 crores from government-run lenders like IREDA and PFC, the company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. 260 crores remains completely unaccounted for. The company has bought only some 4,700 EVs, which is fewer than promised. Not just that, funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias, where the going price starts at 64 crores for a 4-bedroom, golf sets worth 26 lakh rupees, money transferred to accounts of wife and mother for personal use, money used to fund trips, payments of credit card bills, among others. Imagine that's not even the worst part. The company promoters have repeatedly lied to investors, and there are a whole lot of them. 36% of the free float of the Gensol stock is held by retail investors. They are left holding the bucket today. SEBI has noted that the company made misleading disclosures to investors filled with hollow MOUs. And when NSE officials visited their Pune plant earlier this month, what they found was shocking. Against the claim that the company has received large orders to build electric vehicles was a non-operational factory, no production, no staff, no minimal power usage, effectively indicating that there was nothing being done there. Based on this, SEBI has not minced its words, calling it a complete breakdown of corporate governance. It has also said that a listed company was being run like a proprietary firm. SEBI has accused that company funds were being used as if they were the promoters' piggy banks. Now, why has this shocked everyone? Gensol Engineering, of course, is a listed company that positioned itself as a key player in India's green energy transition. Its spectacular fall from grace has broader implications and lessons. The company has seen a market cap erosion of 6,890 crores since the second quarter of FY24. Its current market cap is just 490 crores, down from its peak of 7,380 crores. Share prices of the company have fallen over 80% from their high of 1,126 rupees. The Gensol episode has raised a series of tough questions on corporate governance, the regulator's role, credit agencies, etc. But the biggest one is, how did the promoters of Gensol Engineering get away with this scam for so long? To speak on this, I'm joined by Hikal Ltd, President of IIAS, Dr. Purva Javadekar, former member of RAC, SEBI, Pankaj Tibrewal, founder and CIO of Ikigai Asset Manager, and Suhail Nathani, Managing Partner at ELP Law. Welcome to all of you, and thank you so much for speaking with us today. Hikal, I'm going to begin by just getting your take. Now, I know this is an interim order. A forensic audit will follow, and probably if the requirement is there, it could go ahead with criminal charges. But as of today, investors watching this, and retail investors especially, what they're seeing for the Jaggi brothers is a slap on the wrist. They're barred from accessing capital markets. The stock split has been barred, and that's pretty much it.
Yeah, look, I think this is a very classic case in terms of what we typically see for companies which are not very well governed. I think when you look at the options for retail shareholders, they are limited. There is a legal action, of course, and they can 100 shareholders can get together, or 10%, or shareholders holding 10% can get together and either seek an operational mismanagement case or bring an EGM, try and remove the promoter. But by and large, at this stage, I think from the shareholders' perspective, they can only hope that SEBI is able to bring about a change in management. I think the issue from what the SEBI order seems to suggest is very clearly an orchestrated plan to divert money from the company into promoter controlled company for whatever be the reasons, including personal expenses and extravagant lifestyles. It's not a new story. And I think the fact that SEBI has come out with this interim order is indeed based on a complaint that investors have filed, is a starting point to some of the redressal to what has actually happened in the company. But I think at this stage it's too early to call on what the final action will be. Yes, the promoters have been barred from being on the board and holding key MPs. It doesn't really stop them from remote control of the controlling the company through remote controls. But notwithstanding, at this stage, it's still a step ahead than where it was earlier. And from the shareholders' perspective, they can only hope that SEBI takes a much stronger stance in its final order. This is an interim order.
Yeah.
In the final order.
No, of course. What I think it's important for us to understand is the extent of fraud. Now, we have reached out to the promoters, and through this medium, I'm once again saying, come and speak to us if you have something to say, if you have a response to this, because there are two things. One is that, you are trying to run your company, you don't manage to. A lot of companies fail for a variety of reasons. That's one part of it. The other part is that you've gone out of your way to fool people. And that's where it gets shocking. I want your comment, Pankaj Tibrewal, on what this means from investor confidence point of view, because when the details come out, and I'm just quoting from the SEBI order, the promoters have diverted money to the mother, the wife, luxury flats, spent money on personal trips to the tune of 3 lakh rupees, shopped at Titan, bought golf clubs. I mean, it's a free-for-all that was going on here. Is there any other side of the story possible with the facts that we have right now?
So Tamanna, I think, as I've been saying across at different forums for the last 2 decades, investing is simple but not easy. And hence, corporate governance and forensic check becomes extremely important. We have an 11-point forensic framework. And if you look at the one most important thing which never lies over a period of time is cash flow. And we look at cash flow to EBITDA conversion. And generally over a 4-5 year period, if the cash flow conversion is below 70%, it's a red flag for us. And there are many other parameters like change in reserves, volatility in depreciation rates, auditors' remuneration in relation with the revenue growth rates, related party transaction, and so on and so forth. And we have given it as a part of our presentation, which is on our website, that what are the 11 forensic framework points which we go into. Also, in December, we wrote in our newsletter the IPO mania which was going around. And just to put numbers in perspective, so last year, 317 IPOs, total raise was 1,80,000 crores. And the average subscription was about 28-29x. An average listing gain was about 40%. So every investor thought that any company which is coming for IPO is a great company. But if you look at 2 important data points, which we have mentioned in our newsletter in December of last year, that if you look at over a more than a decade perspective, the companies start to pump up their revenue and their EBITDA and profit just before listing. So a couple of years before listing, you saw a very sharp curve of revenue and EBITDA and profitability going up, and cash flows being extremely weak. We see a huge amount of related party transactions before the IPO on the listing, before the listing. And after the listing, just the opposite happens, that the slowdown in revenue starts to happen, slowdown in profitability starts to reverse, and the real character of the company. And just to put numbers in perspective, over the last 22 years, only 51% of the IPOs listed on size of 50 crores and above have been able to outperform Nifty. And only 26% of the IPOs listed have been 5 baggers or more. So in the short term, IPOs look like a great thing, but don't forget they don't have a history. And I think history is extremely important because tigers don't change their stripe. And hence, we always advise caution that whenever you are investing in an IPO company, make sure that you do your proper ground check, forensic check, whatever data you have. And if not, stay away for a while. That let that company show and perform over the next 12, 18, 24 months, and then take an informed call. Because there are companies which will never change their stripes. And the company you are mentioning is one of them, where all kinds of corporate governance issues have evolved post the listing of the company. And people fell into the wrong narrative, and they're losing money. So it's an unfortunate part.
No, so 2-3 very important things pointed out here, and I'm going to come to you, Suhail Nathani. In terms of liability, of course, the promoters who are using public wealth, shareholder wealth, they have gone ahead and even forged documents from PFC and IREDA and given it to credit rating agencies saying, yes, we are paying loans when they're not paying back loans. So false information given to exchanges. There's a whole host of criminality. I'll ask you about that as well. But what about the enablers? What about the people who came out and said this is a good stock? Mr. Tibrewal spoke about doing forensic, investigations. How will a retail investor go to the factory and see that nothing is happening? I mean, NSE had to pull out Mahavitran electricity bills to come to this conclusion that nothing was being made there.
Sorry, Tamanna, is that for me?
Yes, Mr. Nathani, yes, sir.
Okay, so when you talk about enablers, corporate governance has a framework around it, okay? So there were failures at many points. If you look at this company, it had a lot of independent directors.
Yes.
It had an auditor. And if this fraud was so egregious, and I'm using this in a possibility situation because this is an interim order and as lawyers, nothing's concluded until it's concluded. But assuming all this were to be true, the fact is that how can the auditor not know there's no factory in existence? These are very serious breaches and fundamental breaches going to the root of the enablers or the gatekeepers, independent directors, auditors. Then there's another situation here. The other situation here is that these are the most fundamental of quote unquote fraudulent transactions. It's directly gaining in the hands of the promoters. So, sending the money into the wife's account or the mother's account. Something is definitely amiss. This is a pattern, and unfortunately, that repeats itself often times in this kind of fraud. But the data available seems to suggest that something else was occurring. And the point you make about forging papers, once you go down a slippery slope, then you do anything to save yourself. So when they were asking about the loan payment, so if you see the SEBI order, there's a table on what loans were delayed and whatever else. Rather than giving that information, they forged a comfort letter from the lenders to say the account isn't. So once you're down that slippery slope, you're going to grab any rope you can. And I think this is a tragic case of very poor corporate governance. And there are several consequences. One, of course, SEBI has acted in a timely manner and has acted in limits of its power. Two, there will be criminal consequences. There will be auditor questions. There will be a whole bunch of questions that come out of this. And unfortunately, it is going to take time. And this is what will hurt investors, because until all this is settled, value of the company is going to be affected.
The slippery slope is at one end, and of course kudos to SEBI for coming out and investigating all of this. The company in question, it's a listed company, the stock is still trading, has not even come out with one word of explanation. Dr. Apurva Javadekar, give us your perspective of what is the extent of liability. For now, the promoters have been asked not to participate in stock markets or hold any key positions, and that's pretty much it. But how far and to what extent can any punitive action go?
So thanks for having me on the show. Just a disclaimer, I'm speaking in my personal capacity or not in connection with any work done for SEBI in the past. Having said this, I think the charges that can be brought by SEBI are limited. Well, SEBI is a it's a regulator for listed companies. I think if the charges are of criminal nature, that can be brought under by different different departments like SFIO, serious fraud investigation, and so on and so forth. I strongly feel that in this case, if the data that is out there has any merit or truth, then I think all those agencies will be involved sooner or later after SEBI sort of comes up with a final order. SEBI has already in the interim order barred them from participating in the securities market, but I think they can also sort of make credit rating agencies answerable to some extent, because in this case, really, internal governance is one thing, but there are at least 4 external agencies that are involved: the auditors, the lenders and their due diligence committees, the credit rating agencies themselves, and there were ample signals even before SEBI sort of came up with the interim order that things are not in according to what
what Dr. Javadekar
should be.
No, I'm glad you brought this up. No, because I just want to tell our viewers, on 10th of March, we did a show right here on NDTV Profit on a program called Know Your Company, where we went into detail of Gensol. You can go on our website, you can go on our YouTube channels, where we have threadbare laid out why this was a fishy situation. But having said that, Dr. Apurva, what are the smoke signs or the red flags that people should have seen and we should have acted on earlier? Because this company is listed since 2019.
Right. So multiple, observable, in public domain, it was kind of known from the financial reports of the companies that related party transactions are a big part of the revenues compared to the peers. So related party transactions are always a red flag. In fact, some of the other exchanges like Singapore and Hong Kong make it mandatory to have independent financial audit of specifically for RPTs before IPOs and so on and so forth. So RPT was a flag. Promoters were pledging their shares beyond a limit. 70-80% of promoter shares are already pledged. Debt was rising very fast. Interest coverage ratio is low. That's all in public domain. So you should have already seen that coming. But from rating agencies' perspective, because this reminds me of the Wirecard fraud that happened in that was a German tech company, a fintech company. Again, there the auditors relied on the self-reported data, and Wirecard was repeatedly saying that we have $1 billion cash sitting in our Asian bank, but no cash was to be found at the end. And again, this was just based upon the self-reported data. Here also, the promoters seem to have forged the letters, like the letters on behalf of the lenders, PFC, and so on and so forth. But CRAs, the credit rating agencies, could have got an independent confirmation from the lenders themselves. Open banking is out there. You can obviously get information from CIBIL and CRIF Highmark about the defaults. Defaults happened in end of December.
So who was supposed to do this?
2024.
No, Dr. Apurva, who was supposed to do this? Because you had.
My sense is my sense is auditors in the routine course should get some independent evaluation of some of the balances themselves. They can get it. They have the authorities, and as well as credit rating agencies. So I think both of them. And internal audit committees, most of these related party transactions go through internal audit committees. So that, all those agencies or the offices had enough powers to do this. The one interesting point I would like to say, though, is the fraud. Fraud seems to have been perpetrated or implemented through a non-related party, which is Jio Auto. However, SEBI's regulations, LODR, mandates now that if a transaction is with a non-related party, but the ultimate benefit is going to be for a related party of the company, then that transaction ought to be reported. So that is a one violation from that SEBI has highlighted. But yeah, that's sort of interesting point that companies are going at
Pankaj Tibrewal, this point that if the promoters want to perpetrate a fraud and use public funds as their piggy bank, then where is the watchdog till the ultimate watchdog, which in this case is SEBI, steps in? What were auditors doing? What were independent directors doing? What were credit rating agencies doing? And do you think that there is a larger role than what is apparent right now? Because think of it from an investor's point of view. They think all of these checks and balances are there in the system.
See, Tamanna, on the hindsight, we can ask questions to all of them, right? But the final, responsibility lies with the investors while doing their due diligence. And I believe that in India, getting the right promoters is the most important. We did a masterclass last year, 7-8 months back, when markets were at their peak with your colleague Neeraj. And the main point was what not to do in investing is most important. And I'm not very, I'm not very sorry for a lot of investors in this case, because the writing was on the wall. If you look at the last 5 years cash flow, operating cash, they had not made any operating cash flow. Actually, it was negative. So people were getting carried away by profit growth. But cash finally is the reality. And I always say top line is vanity, bottom line is sanity, finally cash and bank is reality. And hence also every part, auditor, regulator, rating agencies, bankers all have a role to play. But if the intention of the promoter is to do fraud, how can you prevent it?
No, so I don't. Okay, no. So I don't know. I don't know if I entirely agree. If this is the
intention, you can't. You have to do that groundwork.
How will a retail investor go out and do this groundwork?
Don't invest directly then into stocks.
Hetal, do you agree?
My point has been very, very clear.
Hetal, do you agree? Go to a mutual fund.
If you are not equipped of doing research,
yeah,
why go into that area and do the stock picking? Many stocks, when they were flying high, people were saying that, what have you done as a professional manager for 20 years? You're only giving 20-25% compounding. Look at my portfolio is flying away to 5x, 6x. Now the reality is when liquidity comes down, all these skeletons starts to emerge. We have seen cycles after cycles, Tamanna. This is not for the first time. And the point which I'm trying to derive is that if the intention of the promoter is to do fraud, whichever checks, balances, everything you do, if the niyat is not right, it will finally reflect the outcome. So we may debate that what were the other agencies doing, what were not doing, but finally it's the call of the investors that what is the reason they invested in this company. Was cash flow there? Answer is no. Were other corporate governance issues checked out? Whether the promoter's background was checked out on what they have done in the past? Answer is no. So let's not try and fundamentally question all the other. They are also maybe surprised by the intention which.
So no, okay, that's a point of view. We're having a conversation. We're having all different points of view. Pankaj Shibrawal is saying that अगर चोर चोरी करने ही वाला है तो आप अपना पर्स संभाल के रखो. Net. But then who is responsible? Then why should retail investors then have faith in the Indian market? They do if they think that none of the system is working. Let me just get more points of view.
Just a minute, I wanted to make.
Yeah, okay.
You saw the biggest thing in Satyam in 2000.
Yeah, and no one can say that was not a top-rated company at that point.
It was the favorite company owned by so many people, but the intention was to do fraud and show cash as a part of the bank. And that's why we have in forensic called cash yield. In many companies, what we see, the earning on your cash balance is 1 or 1.5%. What does it mean? That if you are earning below your repo rate, that means the cash in the bank is not there. That means at the quarter end, you are showing cash balance because your yield can't be 1.5, your treasury management can't be so bad. So I'm saying that when you have those checks and balances very early on, you can know what to avoid. And in India, to be honest with you, out of the 5,000 listed companies, you need to know where not to invest in. And then your list of where to invest in becomes actually
I'm running out of time. Let me quickly get more views in on this bone of contention. Whose fault is it? Hetal Dalal. If these promoters are in need for fraudulent, as a SEBI interim order says, they can't help it.
Look, I think I'm with Pankaj on a lot of these things, right? My view is that yes, if there is an intent to fraud, it becomes difficult. But I think there is also responsibility from the investors' end. Let's talk about related party transaction. That is clearly a red flag. In most instances, that's something one should question very carefully. Now, when you look at the transactions brought up in December 2023 or even August 2023, right? All of these are basically providing securities or support to family companies or group companies. The question is why. Now, in this instance, the audit committee failed to answer the question of why should a listed company provide support and financial support to group companies. Two, how many of the retail shareholders really voted on this transaction? Right, these transactions get put to shareholder votes. Retail shareholders only want to make money. They're really not looking responsibly at how the company is operating and whether they can exercise their right and their franchise as a shareholder. So if shareholder democracy
so exercise your right. Fair point. Suhail Nathani, just last point from you. I mean, at the end of the day, at least in terms of equity investors, no one's there to ever bail them out, as it should be. That's not how the system works. But will these promoters now be liable for what they've done, apart from the SEBI wrap?
I just want to step back. One, I can't disagree. If a promoter wants to commit a fraud, it's very difficult to catch him. But in terms of the market needs to function. There has to be basic trust. You can't assume that, a fraudulent promoter can get away with anything and for the longest period of time. We've had this since time immemorial. The market needs to work and it can't be down to only the investor. Of course, caveat emptor and all that is well known. But what about the systems that were already in place? The point was made by Dr. Jatlikar that where was care? Where did they see when the lending agencies didn't follow the money to actually see that there was a plant up or not? How many cars were bought? The market needs to work for investors to have confidence. It can't be the investor's responsibility to check out everything 100%. Some fundamental issues just come from a solid market. And frauds happen everywhere. Germany, you heard, by fraud, USA, all the places they happen. But we continuously need to improve our systems. And don't forget, this is an SME IPO. You may want to look at how many SME IPOs have had.
I agree. That's the next question. We need to go back to the drawing board, and something Pankaj Tibrewal talked about, and they've written about that. Watch out for this IPO boom, because there could be a lot of muck hidden under the surface. We're not saying it's everyone and every SME IPO. We're not claiming that. You can't broad brush. That's not the claim, but you need to be careful. And for those who have defrauded the public so blatantly, well, I hope that there is clear comeuppance coming. It's just not enough to have a SEBI interim order, much more hopefully to follow. Thank you to all of you for joining us on the show today. We'll take a very short break, but stay tuned. A lot more coming up on the other side on NDTV Profit.
That's huge. That is a biggie. It's out.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the out
recover from day's low to trade flat. Nifty trades well below the 23,300 mark. Sensex at 76,700. Nifty PSU Bank leads the way in sectoral action. Media and defense among winning sectors as well. Metal, auto and IT drag the most. Gensol Engineering gets locked in lower circuit, down 5% in trade. This after SEBI barred companies' promoters from securities market for fund diversions. Company's 1:10 stock split plan has also been put on hold. Also watch the full coverage on Gensol India only on NDTV Profit at 6 p.m. Sigh of relief for IndusInd Bank. Stock gains more than 5% as external auditors find 1,979 crore rupee impact in derivatives portfolio as against the estimate of 2,100 crore rupees. IREDA buzzes on strong Q4. Profit soars 49% to 502 crore rupees. Net interest income jumps 58% to 758 crore rupees. Chat with management coming up on the show. Nifty Pharma dips as US Commerce Department starts investigation on pharma imports under its Trade Act. What would this mean for the Indian pharma sector? Detailed analysis on this show. Wipro all set to post its Q4 results today. Revenue expected to rise 1.6%. Net profit is likely to fall 1%. Will there be yet another flat quarter for the Indian IT giant? We bring you more details on the show. Hello and welcome to Profit Buzzers. My name is Nika Barve and with me is Hikal Ltd. And Hikal, let me pass on to you. How are the markets looking like right now?
I mean, it's an interesting day of trade. We are at 23,350 Mika. And from here on, what's the upcycle looking like is the key. And if you're able to sustain, then there is a potential of a rally that could continue. The FI number is also going to be very important today because that is going to tell us whether there is short covering happening in the markets or not. But though we are off the day's highs, but from the lows, we are again seeing a recovery. We hit a low of 23,273 in terms of Nifty 50 in today's session. From there, we are back at around 350 levels. So a 75 points recovery coming in there. Let's quickly pull up all the, a heat map in terms of individual sectors as well and see where the gains are coming in and where the losses are in today's session. Clearly, you have auto, which is on downer today. Metals is taking a beating, IT as well. And the pharma pack, which is in the red. But what's gaining is the PSU bank index and the private bank index, which is seeing gains in the range of 1.2% to almost 2% as we speak. Media is up in trade. Defense, second or third consecutive session where the up move has continued. Oil and gas is seeing a good run overall. So that's with regards to individual sectors that we can speak about. But let's quickly look at the Nifty 50 heat map and the contributors as well as the next one. If you see in terms of the heat map, IndusInd Bank is the top gainer for the obvious reasons with regards to the downtick or the impact on the derivative account. That number has been lowered by PwC in terms of their estimates. Axis Bank is on an uphill. Trent is seeing a good run today. HDFC Life as well as Eicher Motors and JFS is in the positive. Maruti, Hindalco, Bajaj Finance, Bajaj Auto, Shriram Finance are the ones which have been trading under pressure. Let's also look at the contribution heat map in terms of Nifty 50, because that will give you an idea as to which are the stocks which are holding, helping Nifty hold up to the gains. Axis Bank, ITC, Trent, and an IndusInd Bank are the ones which are contributing. What's interesting is your ICICI Bank, which was one of the top gainers in terms of yesterday's session and was helping Nifty 50 hold on, is the one which is contributing to the downtick in today's session. Bajaj Finance, Infosys, as well as RIL. In fact, Wipro will be reporting numbers today post-market hours. Infosys will be reporting numbers tomorrow post-market hours. So that's going to be a sector that will be on everyone's radar. So that's with regards to where, your large caps go, Mihika. But the trend remains absolutely interesting with the broader markets as well, and a lot of stock-specific action that you're seeing.
And they are outperforming. You have the Nifty mid-cap, which is up almost 0.6% right now. The Nifty small-cap, actually, the outperformer of the day, up almost 1%. If you look at the small-cap, some of the small-cap counters, you have 184 advancing versus 58 declining. JBM Auto is on my radar, up 11%, and we'll talk about why the stock is buzzing in just a short while. GMDC is also up 10.5%. DOMS Industries, Swans, Electra Greentech, NBCC, all of these counters are up over 5 to 6% in trade right now. On the other hand, in the small cap space, something that's not doing well is an MGL on the back of the APM allocation cut, and AstraZeneca and Anantra also, under pressure. I also want to pull up a Worry Renewable Technologies. The stock is buzzing in trade and will be noting and reporting its Q4 numbers today, and the stock is in the green, up over 4% right now. Lastly, just taking a quick look at the mid-cap space, which the index is up 0.5% right now. And if you look at some of the counters, you have 101 mid-cap counters in the index gaining right now. Something like an IREDA, which we will be talking about in just a minute, up about 6% on the back of its Q4 numbers. And MRPL showing an uptick as well, up about 5%, followed by something like a Thermax and Paytm also showing strength of 3%. But IREDA is buzzing on a strong Q4. It's up 6%. Profit has soared 49%. Harsh, we have you here in studios right now. Will you give us a view, and we'll be talking to the management price?
Yeah, absolutely. Very, very strong numbers, as you correctly pointed out, Mihika, in terms of the way this company has taken shape since listing. It's regularly been posting a very strong set of numbers, so no doubt on that. And I'll take you through the numbers first. There's very strong, nearly 30% growth where the AUM is concerned. The loan growth has been strong. Total income also matching it, maybe a little better in fact. And your net interest income number has gone up by near 50+%. So there's been margin expansion which has played out in this year, in fact. And the margin expansion has been strong from 2.85%. The margin has gone up to 3.27%. What have been the margin contributors? It's been cost of funds, which has come down quite sharply over the last year or so. 20 bips reduction in the cost of funds in a year in which the repo hasn't really changed. So that's something which really stands out. Yields not going up materially, and therefore this is probably the only lever available to expand margins. Mind you, PFC, REC do 3.6% margin, and therefore is there scope for more margin expansion will be probably one of the few things that I'd want to talk to management about. I'd also want to speak about how the Gensol account is evolving and how that is getting recognized on the P&L. It's a large account, 650 crore, which is outstanding from Gensol. How does that
and what's interesting on that
account?
and the impact in terms of your asset quality, because if you see the asset quality trend as well from what you were mentioning, there has been a spike that has come in the fourth quarter as compared to your second quarter, right?
Yes.
Third quarter is where it was still lower. So your Q4 asset quality number, your NPAs, are higher than your second quarter.
Q2.
So
Q3 saw a spike, Q4 saw a cool down, but not as much of a cool down.
Cool down as compared to Q3, but still they are higher than the second quarter, right?
Yes.
In fact, let's also get in the management, which is Pradeep Kumar Das, CMT at IREDA, who will be joining us to discuss more. Welcome to the show, Pradeep, and a very good afternoon to you as well. And firstly, congratulations for a strong set of numbers. I'm sure you are expecting a question from us with regards to what happens to the Gensol account. But before we head across to that part of the business, aspect, is the kind of growth that you've seen currently in terms of your AUM and profitability expected to continue, in FY26, or do you think it will outpace what you've seen already this time?
Yeah, very good afternoon to all the viewers and you, and thank you very much for inviting. We are talking about quarter growth. 20 quarters consistently, continuously, we have exhibited the growth. And the CAGR of last 5 years is 27% loan growth. And if you see year on year also 28. So the growth is pretty steady. And not only that, in addition to the growth, being a regulated entity by RBI and SEBI being listed now, we have exhibited best quality corporate governance standard in the country. We're the first banking, non-banking company in the country who has published the audited result. We're the first public sector in the country who has published the result. So in an NBFC and project finance company, particularly those who are dealing with new and emerging technologies, we need to carry always certain amount of risk vis-a-vis the other vanilla lending and all. Sigma of that, if you take last 38 years, we have financed more than 1.5 lakh crore. And our cumulative write-off till 31st March of 2025 is around 215 crore. So therefore, growth is happening continuously, consistently. There are two factors. One, the demand factor, 485 gigawatt of renewable is going to be installed. That is what the national commitment at global level and national level. That is not only for capacity addition to have economic development, to ensure a sustainable environment. And we are very fortunate since 38 years, we have played a key role in handholding through financing and handholding through policy formulation and policy implementation by our ministry, that is MNRE, which deals not only renewable, also new and emerging technologies. So therefore, we have exhibited continuous growth. At the same time, we in IREDA in last 5 years, why I'm talking 5 years, in last 5 years our book has grown almost double the size addition. That means 3 times it has become what we had in 33 years. In March 20, our book size was 123,000 crore. Now it is crossed 76,000 crore. And if you look at last 5 years, when you talk about reporting the audited result, we are the fastest in the country, and it has not happened once. Continuously, from 30 days to 25 days, 25 to 19 days, 19 days to 15 days. Now we have targeted next year to do around 12th of April. So that speaks about our command, confidence and trust in our system, policy, process, procedure, and at the same time, the perfect ecosystem, what our ministry and Government of India has played by handholding to develop the sector in a sustainable manner.
Perfect.
And we are confident not only to ensure this kind of growth, further improvise in it, and further improvise in our corporate governance standards.
Point taken. So, sir, give us context. Harsh also joining in. Give us context. What's gone wrong, therefore, where Gensol is concerned? Because it's a large exposure. It's nearly 1% of your book, including interest and principal both. So, what, in your opinion, has gone wrong when it comes to that particular account? And when do you recognize for that? And how large will that recognition be? Because it will likely wipe out around a quarter or so of your annualized profit. So, when does that recognition happen? What went wrong?
First, I'll clarify, NPA doesn't mean write-off.
Okay, fair point.
I said in last 38 years, we have financed 1.5 lakhs crores more. And our cumulative write-off is 215 crore. NPA happens. In March 20, our gross NPA was double digit. And 7.18 was net NPA. From there, we came down to below 1, that is 0.95 net NPA in December. So in September. So in due course of time, this is a sector where you have to take the challenges and you have to act proactively, which we have been doing consistently and continuously. Now coming back specifically to this, yes, we have lended, and remember this is the larger part of our loan in this company or group is towards e-mobility. So e-mobility has to grow in the country, and that is not only going to become a game changer, but also going to ensure sustainable environment, because the transport population need to be arrested. So as of now, in last audited data, we have around 650 crores of fund-based outstanding and 170 crores of unrun.
Pradeep, I will want to interrupt you over here. Just give me a moment. We absolutely understand that the lending that you have done to Gensol, majority of it has gone to the EV side of the business. The question over here which has come up over here is that there has been a fraudulent practice at the end of the promoters where the money that was lent for the EV side of the business has been used for other transactions or other related party transactions. A lot of other things I'm sure you would have known as well as to what has happened. I mean, what has been the reason? I mean, what has been your, on what basis have you lent to a Gensol when there have been such irregularities over there, number one? And number two, how are you going to account for it in your books?
See, first of all, as of now, our account with them has not become NPA. Number one.
Okay.
And number two, whatever overdues as of 31st March is around 80 crore. Against that, if you see, we have around 60 odd crores in the form of Desra and FDs. Okay. So roughly this 80 crore to recover, around 60 crore we can recover even overnight. But that is not the way to handle. You see, now we have not stopped lending any additional financing to them for quite a long time, because if any of our developer is growing and growing very fast in the private space, we also have a review monitoring mechanism. Our team is doing, and since we are under RBI, as per the RBI policy, we have a investigation policy. So our team investigation committee is doing that. Parallelly, it is going on, and yesterday we are very fortunate. We have published the result, and then we have seen the SEBI's report in their website about their findings and all.
Okay, so Pradeep, I understand the point that the account with regards to Gensol has not turned into a NPA yet with regards to IREDA, correct? Now, taking the timeline into consideration, what are the number of days left for a Gensol to turn into a NPA with a IREDA if a default happens, number one? And number two, what is your conversation right now with Gensol, taking into consideration what has happened?
When we are doing investigation, and a kind of what it has appeared yesterday, that is leading towards a complete corporate governance breach and fraud. See, as a project lender, as a long-term lender, what we generally do after doing the due diligence, after our appraisal, and this is way back in 2022 and 23, we had financed for them e-mobility. And in last 2 years, they have grown very fast also. Again, in 23-24 also, we have done part financing. So what I said, out of this 650 and 170, majority of the e-mobility, there we are having the car registration with us, hypothecation to us. And in e-mobility space, our assessment is e-mobility business is going to be a sustainable business. So therefore, there are a lot of various options available for us with respect to recovery of the amount. Since we have majority of the assets through securitization, and also DESRA sufficiency is there to address fair amount of current overdues now. So at least for a month or two, we can manage with this. And then our team is investigating. And until unless we come out with a conclusion, it will not be fair on my part to comment here what is the exact number and what is the exact amount. Otherwise, I will be guiding my team what they are doing. We are working in one of the best corporate governance manner. So the team is doing its independent work. Good that we have found the report of SEBI yesterday. That report also we are taking cognizance. And since this amount of 650 crore, which is not that significant with respect to the total loan book what we are having today, that is not going to impact on the overall level. And moreover, since we are having the vehicle security, we can look into alternate option. One of the options could be we can go look into change management. If the change management happens, then in the past also we have handled it. It is not like that one account in renewable become NPA, then but that is going to impact the sector entirely. No. And since e-mobility is an emerging sector, we have to look into it. And this all now appearing to be bit of or quite a lot of indiscipline in the corporate governance mechanism with that group or company, which now is coming out. And moreover, we have 500 to 1,000 of lenders and all. We do monitoring, and whenever account goes to SMA, then we start taking action and all. We have a regular review monitoring system in place, and team is working on it. And the investigation committee, what is after the RBI, they are working on it. And very soon we'll come out with a amicable solution. And one thing I can assure you as well as to the viewer and to my investors that we'll take most appropriate action. within the prevailing rules, regulations, and governance principles, whatever will be in the best interest of the organization and sector.
Absolutely point taken, and we do understand that, IREDA's exposure with regards to Gensol is just 0.8%, right? So it's not, the quantum is not the question over here. The reason we wanted to talk about Gensol was because there is this kind of worry, not for a IREDA, but with a Gensol amongst investors as to what has happened. So no one is doubting as to what has gone wrong with IREDA, because with IREDA, everything is on track in terms of the numbers as well, the kind of growth that we are looking at. So let's make that absolutely clear. In fact, my next question to you is with regards to the margin trajectory. Strong margin trajectory is what you've seen. How sustainable is it, and any deviations that you could see?
See, 2-3 points, how we have enabled this sustainability. We have improvised the rating last year. We have gone for AAA stable by all our domestic rating agencies, so that is the highest rating. Then we have gone for overseas rating, that is in the first attempt we got sovereign, at par with the sovereign rating. And then we will further work on improvising that also. Then that will enable us for the overseas borrowing at a cheaper rate. These two. Third, we had submitted our request to Government of India. The issue is now pending with Ministry of Finance, and we have requested for them to allowing us to go for the 54 EC capital gain bond allocations, which recently HUDCO also had applied. HUDCO had recently got. We believe that we will be getting that soon also. But since it is with Government of India, and we being a separate entity, I do not want to influence Government of India. It is Government of India's call. But we are confident, since we are working in infrastructure sector and we are working on a green energy sector, which involves challenges and new and emerging technology we are supporting, we need to be given that kind of, and post our IPO, we are having fair amount of trust and confidence with our investor community. Once we get that allocation, we can resort to further cheaper funding. That will further bring down our borrowing cost and our margin will improve. And if you look at the overall interest rate, certainly there we cannot go up just like that, because we are working in a sector which is very much interest rate sensitive. In the vanilla area, it is
Sorry, sir, for interrupting. So where should margins go therefore? Will it be 3.5%? Will that be the cap? Are you happy with the 3.3% margin? Is there an aspiration to go beyond 3.5? Give us that perspective.
See, if you ask, we do not have any target.
Sure.
Okay. But personally, I believe that 3 to 3.5 will be ideal, because here it is not just economic gain for which we are working. The moment any capacity addition we are supporting, that is contributing towards energy transition, decarbonization, sustaining environment. So therefore, for us, optimizing the economy of interest by improvising, yes, right. At times we have that authority kind of thing, because many area we are almost having a kind of monopoly for being a fast mover. We can charge higher interest, but that will not be appropriate. We have to keep in mind how fast the sector grows also. And 3 to 3.5 is a fair amount of margin being in project finance, that too in RE finance.
Right, okay. So point taken. Really appreciate that answer. Sir, the other one is with regard to growth. You've grown at a very, very healthy clip over the last 2 years. Now your base is 75,000 crores. So it's starting to build in that sense. From sub 50,000 when you listed, you're currently at 75,000. So on this base, can you continue to grow at 25 to 30% is my question. I'm not asking you for the size of the opportunity. That I understand fully is very, very large. But can you grow sustainably with low credit costs at 25 to 30%?
Our growth is completely dependent on what kind of equity augmentation we can do. If we can have 1 lakh crore today, our balance sheet will be 7 lakh crore this year. So for us, we have richest of the expertise in the country with respect to green financing. So for us, the only constraint today is equity additions and ensuring corporate governance. As far as corporate governance, we have already established, we are best in the country as far as banking, non-banking space with respect to reporting of the result. And every quarter we are doing full audited result, which is not a mandatory activity for the corporates, but we do on our own. And we are trying to improvise day by day, almost every day, whatever way our process, policy, procedure can be realigned, which is absolutely commensurate to the sectoral requirement as well as to the regulator's mandate. So we are playing a very balanced approach in that growth. We'll continue to do that. Only our constraint is that adding equities. Like we had planned for QIP, we could not do because of the market conditions and all. Because we don't want to just go to the market and sell at a very low price of our shares. We have to do the justice to our existing investors. And we augmented that through the PDI mode. And we have ensured a healthy CRAR 17.7 despite not having a QIP. So our consent is that. So more and more equity we have, and we are also strengthening our manpower. These are the two things which we need to augment in the time to come for ensuring this kind of growth. And these numbers is going to happen because when we have submitted by 2029, we are almost planned to become a marathon company. We have exhibited 27% CAGR growth. And last 5 years, we have given 27%. So with that spirit, we believe if we continue to maintain this kind of momentum of discipline in our approach, then we can reach to that stage also.
Understood. Got your point, sir. Thank you so much for joining us this afternoon, sir. It's absolute pleasure speaking with you, and always good having perspective from one of the largest lenders in the power space. So thanks for coming in and speaking with us. Very, very interesting.
Thank you very much.
Thank you, sir. Very, very interesting, Hiral, from a perspective that he said that there are no restrictions with regard to growth for him, given that the only possible restriction is liquidity and the only possible restriction is capital adequacy, which they are trying to take care of through a QIP. They've tried that once, is what they said. Not comfortable with regard to valuations but likely. Yeah. We've seen a bounce back in the stock price. Can we pull up maybe the stock price for the last 3 months or so? We've seen a bit of a bounce back in the stock price from the lows, and who knows, they may well look to raise again very, very soon. As you can see, the stock price is bouncing back. 6% higher in trade
today. And absolutely, in spite of the Gensol impact, the street is not really taking that negatively, at least from an IREDA perspective, because the exposure is just around 0.8%, so 0.8% is the kind of exposure. Thank you, Harsh, for joining in the conversation as well. Let's just quickly pull up PFC and Gensol as well with IREDA, because that was the conversation that we were having as well. If we can have the 3 stocks that can be taken up together, Gensol has been trading under pressure. But as you're seeing the flashes at the bottom of your screens, 2 stocks that are in focus right now and taking a beating. One is Lupin, and the other one is Zydus Life. Both of them have gone down to the day's lowest levels, and this is with regards to a litigation on a key drug, which Lupin and Zydus have lost that litigation. I'll get in fact, Varsha, my colleague who tracks the space pretty closely, to get us more as to what was the litigation about, what has happened, and how does it impact both these companies. Varsha, over to you. Both the stocks at the day's lowest levels.
Yes, absolutely, Hiral, and as you rightly said, so this is a big negative news for both the companies, as there was a litigation or a court case going on, wherein now Zydus and Lupin has lost that litigation on a drug which treats overactive bladder. Now the name of the drug is Mybetriq, which contributed meaningfully in Q1 FY25 for both the companies. This drug contributed almost $35 to $50 million of sales for Zydus and 15% of EBITDA for company. And they were expecting 120 to 40 to 120 million of dollars sales in FY25 and 26 as per consensus estimates. And for Lupin, this product likely contributed almost 7 to 10% of EBITDA and $15 million of sales. Now, what these companies might have to do, because they have lost the litigation, they will have to withdraw the drug from the market, because somewhere in April 2024 they came out with the generic version of this product and started selling of these products, but now they might have to withdraw this product, and this means that they may see some financial penalty from the court. So this is actually very negative, because that contributed good numbers in Q1 FY25 and was expecting good growth in future quarters as well.
Thank you, Varsha, for getting us the details. In fact, we have, both our guests who are standing by with us as well, but we will ask them to wait. We'll quickly slip into a short break and then speak to them about IREDA, Lupin and Zydus. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Profit Buzzers on NDTV Profit. But let's welcome in our guest, Gaurang Shah and Brajesh L, to discuss the stocks that are buzzing in trade today. Welcome to the show, gentlemen. Gaurang, let me come to you. I'm sure you've heard the entire saga with regards to what's happened with Gensol and the kind of exposure IREDA and PFC have on it as well. Any comments on that?
Well, thank you so much, Hiral, for having me on the show. Good afternoon to all of you all. Comments would be restricted to IREDA because that is where we have our coverage, and it does give a soothing feeling post the statement made by the management in the interview, which was just a few minutes ago, with respect to the exposure that they have of 80 crores, 60 crores is marked up for, which they can sell overnight and recover. They have not yet the account is not yet NPA. That is what was mentioned. So my sense is that the reason why I say this, because IREDA, we have a fundamental coverage. We've been recommending the stock right from the time it got listed via an IPO note with a subscribed recommendation on the IPO. And post that, we have a standalone fundamental coverage. And I don't think it's going to be that difficult because in terms of percentage, it's very, very small to the exposure that IREDA has to Gensol.
Right. So that's with regards to IRDA, Gensol. Gaurang, another question with regards to Lupin as well as Zydus as well. If you talk about both these companies, the recent news that we've picked up is in terms of the litigation, where both these companies will have to actually withdraw their products as well from the market. How are you looking at both these names? And both of them have seen a downtick of almost 3 to 4%.
As we speak, we have coverage on Lupin and Zydus, both of them. I think the news is just out. We will need to draw down in terms of what kind of hit this particular story that has developed will take on the earnings and the profitability, because that is something that we'll have to work on. But we have a positive coverage on both Lupin as well as Zydus from a long-term point of view. We will possibly relook in terms of the hit that they'll have to take on the bottom line.
So that's with regards to Lupin as well as Zydus. Brijesh, very quickly, what are charts indicating for both these stocks?
Yeah, so maybe there is a sell-off clearly. My concern would be the 200-day moving average, which I'm looking at into the Lupin. So basically the value of the 200 is 2070. So for me, technically, as long as the prices are below the 200-day moving average, I will be cautious. And the recent low of this 18, close to 1850 is what I think it can drag up to. Maybe it can break that also. But then the view remains slightly cautious, and maybe I would look for another 100 odd points of correction in the Lupin. Coming to Zydus Lab, it has been an underperformer since October 2024, and now it has been like trading lower lows. So most probably with the overall negative bias, I think it can go back to 800 or might break 800 as well. So I'll wait for this correction to get over and then we'll review the position.
Right, so that's with regards to the pharma names. But let's quickly see the flashes at the bottom of your screens where the statement is coming in from the White House, where they're saying that China will now face up to a 245% tariff on imports to the United States. And this is as a result of their retaliatory actions. How much of this is actually actionable and executionable or not is anyone's guess. But that's what we're picking up in terms of the retaliatory action of China, who will now face a 245% tariff on imports. What they also said is that more than 75 countries have already reached out to discuss the new trade deals, and as a result, the individualized higher tariffs are currently paused amid these discussions, except for China, which actually retaliated. So because China retaliated, Harsh, a 245% tariff is what they are going to see on imports to the United States. And I mean, the question is going to be with regards to execution with China.
It's been a lot of back and forth, you know, from 40% to 84% to 245%.
And what pocket within India also benefits as a result of this? Whether this is sustainable.
There is that kind of shift. You know, we just spoke yesterday, we had a Nomura note about smartphones and how the supply chain could shift, and how you have something like a Samil or Dixon that could benefit more from production in India. So there are pockets in certain stocks that do benefit if this does come into play.
Let's just pull up Nifty 50 on the screens very quickly and see what's happening, if there is any minor reaction on the back of this as well. So that's, I mean, if we can just get a Nifty 50 chart, there you go. Nothing, I mean, major shifts happening over there. But now that Harsh is still with us, he's patiently waiting to do his bull, bear and banter conversation on YouTube. But Harsh, that you're with us, very quickly, if you could tell us how have the earnings been with regards to ICICI Prudential as well as ICICI Lombard, because these are the other two stocks that are in focus as well.
Yeah, absolutely. So when we speak about an ICICI Lombard, while overall the top line was much better than expected, what has really kept the street slightly tepid on this counter today is the fact that the combined ratio has come in at 102%, 102.5% versus the estimate of 102%. This number essentially indicates the profit made on the top line for a general insurance company in the most layman terms possible. And therefore, as you can see, that
the profits were lower than expected. Where has that profit come in lower than expected? Where has it disappointed? Claims ratio. The claims has been elevated this time around versus the expectation. Management says this is par for course. There's nothing major in that sense. They're focusing more with regard to health, less with regard to motor, because they continue to see pricing pressure in the motor segment is what the management told us. They believe that that should unwind in FY26, and therefore there should be a double tailwind with regard to both health and motor in FY26. But that recovery in motor has been long awaited. As of now, we're not seeing it, and that is the other piece that's possibly keeping a lid with regard to how Lombard is reacting in trade. But outside of that, that's how the numbers shaped up. Now let's talk about ICICI Prudential, because that was the other one where we saw a decent kind of a number. We saw 3,500 crore being the APE, which is the top line equivalent. We saw very strong growth sequentially off a low base. YOY, it was a negative 4%. So it was a tepid growth number on the APE count. In fact, it was lower than our estimates as well, around 2.5% lower than what we were penciling in terms of top line. Value of new business came in largely in line at around 795 crore rupees, 2% growth YOY, 54% QOQ. VNB margins came in at 22.7%, and this is where the kicker starts to appear. Up 1.5% both QOQ and YOY, so we're seeing an uptick with regard to VNB margins. That is expected to sustain in FY26. Product mix changing, which is the key positive, and that's likely why the stock has reacted the way it has in trade today, Mihika.
Got it. So you have ICICI Prudential as well as Lombard in focus. In terms of the stock reactions, it's fairly opposite. ICICI Lombard currently down, Prudential up 3%. Gaurang, I'll come to you first. What are your views on something like an ICICI Prudential or an ICICI Lombard in the insurance space?
Well, Mika, so let me give you a broader perspective. We at Geodis Investments Limited are positive on both general as well as life insurance companies. ICICI Lombard happens to be under our fundamental coverage, that's a disclosure. On the life insurance fund, I think the run rate is going to be relatively slower in terms of bottom line improvement with respect to the insurance premium, especially the new insurance premium run rate. So LIC, SBI Life, HDFC Life and ICICI Prudential Life. These are the four insurance related plays that we are positive on.
Brajesh, what about you on the charts? How does the picture for something like an ICICI Lombard or Prudential, shape up?
So basically, after the good amount of correction, this ICICI Pru is looking good on charts. It looks like the stock has taken support, and maybe from another 4 to 5 months kind of a time frame, we believe this ICICI Pru can go back to 650 levels. So definitely it's a buy kind of a scenario, and from the positional trading kind of a perspective, 650 would be the immediate target for the ICICI Pru, and this we are still waiting. Maybe 1900 is a level where the ICICI Lombard might see some resistance. Once that zone is clear, then most probably that can see some reversals. But then the conviction kind of a trade is with the ICICI Pru.
Right, so that's with regards to ICICI Lombard as well, which is slightly under pressure right now. Another stock which is seeing a good day in trade today is IndusInd Bank. Key is they're going to see a financial hit of close to around 1,979 odd crores as per the PwC report versus what was estimated, which is lower. Vishy standing by to get us more. Vishy, what does this actually mean?
It's difficult to say at this point in time, Hiral. It's been a weird sort of a day as far as IndusInd Bank is concerned. Yes, if you look at the number that the bank has come out with, 1,979 odd crore, that is relatively lower than the 2,200 or 2,100 odd crore expectation that the market had. But having said that, there's also an additional point that the bank has disclosed, that the external agency has found discrepancies in the derivatives portfolio. So that is very clear. So now you have apart from an internal assessment of this saying that there was a discrepancy, now you have an external validation of this point. The board, if you remember, on the 20th of March had also appointed another agency to look at this entire issue, to essentially bring accountability in this entire process. So basically, who is responsible and what should be done with because of these issues. Those kind of advisories will come from this other investigative report that will come out hopefully by the end of this month or early next month. What we understand is this is Grant Thornton that is doing this investigation. Depending on the outcome of that investigation, you will see some action at least at the bank. Already the CEO is on a deadline. So there is a March 31st deadline that he has, after which he has to, of course, step down as the CEO of IndusInd Bank. And the bank is already in the process of identifying a successor for Sumant Katpalia. Where that process is, we do not know. We just do know, however, that by October at least, they need to submit names to the RBI. So obviously the process might be currently in full swing. But as far as the stock is concerned, it's been a good day. I think the next big trigger is going to be what is going to happen with the Grant Thornton report.
Yes, the Grant Thornton report is going to be crucial from here on as well. Thank you so much, Vishy, for getting us the details. Brajesh, what are charts indicating with regards to an IndusInd Bank?
See, it's very clear that, even when there are no fresh negative surprises, the stock is moving up. But when I look at from the derivatives point of view, at the 800 strike price, the call writers are very aggressive and they are not unwinding their shorts. So this is not giving me any kind of comfort. So I believe this is the pullback, at least till this monthly expiry is over. So maximum is 800. So it's an opportunity. Whoever has done a trading kind of a move in the IndusInd Bank should take this opportunity to take the profits. And long term, I am not very confident as of now. We'll have a wait and watch kind of a scenario. But whoever has bought lower should look this 780 to 800 range as to take the profits, and just to like post result and post the management call, we should take the view. But on an immediate basis, this level of 800 will act as a resistance zone.
Got it. Let's also talk about an IGL and MGL. Both of the stocks are in focus and under pressure as the government's new APM allocation is effective today. Now, this space is something that has seen a lot of volatility in terms of the APM allocation. So what could this mean for these two counters? Well, Sumit is here to tell us more.
Yes, I don't have the numbers handy, but yes, the valuations for the city gas distribution companies have contracted right from October, when the first APM gas allocation cut had started, because the profitability scenario changes for all the city gas distribution companies, given the fact that now the cheaper gas is getting replaced by somewhat expensive gas. So yes, the valuation multiples have contracted, and this recent allocation cut was already indicated by us on Friday, April 11th, and that is what has come in pretty much in line, 20% cut in the APM gas allocation. But this time the positive announcement that has come in is that the notification clearly says that this reduction in the APM gas allocation will be fulfilled or will be replaced by new well gas. Unlike last time when the APM gas allocations were cut, city gas distribution companies had to rely on more expensive spot or Henry Hub or oil linked gas contracts, because of which their margins had taken a hit. But this time they will be getting the new well gas, which is just $1.3 per MMBTU expensive as compared to the APM gas price, but way cheaper when compared to other gas like Henry Hub, oil linked gas, difficult field gas or spot LNG gas. In fact, when you compare it with the spot LNG gas, new well gas is cheaper by nearly $7 per MMBTU, and analysts believe that if IGL and MGL are able to fully replace this shortfall in APM gas by new well gas, then their margins could improve sizably. Another positive point that has come in for IGL is the fact that IGL in their notification has clearly stated that the new well gas allocation will be 125% of the APM gas. So this will help them to replace the APM shortfall much quickly as compared to other players.
Thank you, Sumit, for putting all of that into perspective. Gaurang, I'll come to you. Your outlook on the space. I mean, a few months ago, this APM allocation cut was seen as a major setback to the margins. But this time, they have the new gas wells coming in, and versus the spot price that becomes, much cheaper. Your outlook on the same?
So I think alternative and changes, Mika, is going to be the order of the day as we go into the future. And that's what the government is focusing on. First of all, reducing our dependency on imports and, of course, increasing our dependency on clean and green energy and viable fuels. So this, while short to medium term, it can have some kind of an overhang on related companies, but we at Geojit Investments Limited remain positive on Mahanagar Gas, Indraprastha Gas and Petronet LNG. Our sense is that there is visible amount of spend from the center and state level for increasing the infrastructure for distribution of pipeline gas, be it in form of CNG or PNG. So while short to medium term, there would be a little bit of concern, but switchover and viability and cost saving will translate into positivities.
So that's with regards to MGL as well. And you're talking about the gas distributors. Moving on, you have the auto pack that is in focus, and this is on the back of media reports indicating that the government is expected to launch a tender for procurement of almost 10,000 electric buses, and this will be under the PM E-Drive scheme. Puneet joins us with the details. Puneet, what are you picking up from media reports? And secondly, which are the companies that stand to benefit and who have the capacity to deliver?
Well, thanks for that. So definitely it's a big news coming out from the union government. 10,000 electric buses to be procured by the government, and now the heavy industry ministry is expected to launch a tender essentially in May of 2025. Now this will be of course launched by CESL for intracity bus movements for electric buses, and that is one of the key aspects of the scheme, where they are looking to allocate roughly 3,000 crores for procuring roughly 10,000 electric buses. Now this is part of the PM E-Drive scheme, which was launched earlier last year. The scheme has provision of roughly 4,391 crores for deploying roughly 14,000 buses. So this new order could be part under the PM E-Drive scheme essentially, and this has been allocated and announced as well as approved by the cabinet as well. Now, when you look at some of the key players, there is JBM Auto, Olectra Greentech, Tata Motors as well as Ashok Leyland, which stand to benefit from this. JBM Auto has a capacity of about 20,000 e-buses, and they are already starting to procure this over the last 2 to 3 years, where they started to supply this to state transport undertakings. Apart from that, Olectra Greentech also has an order book already of about 10,000 electric buses. So these both are key players. And we also have legacy players like Tata Motors as well as Ashok Leyland, which operates the Switch India brand in terms of the electric bus segment specifically. For Ashok Leyland, they already have an order book of 1,800 buses, and the company has recently mentioned that they will not be looking into getting into GCC contracts, but outright sale, which is essentially helping margins, as well as Tata Motors, which has already supplied more than 3,500 electric buses. So all these players in focus on the back of this new tender that could be thrown for electric buses to be supplied across 9 cities.
Right, so that's with regards to the electric bus procurement tender that could be on the cards. Thank you, Puneet. Gaurang, your view in terms of the beneficiaries, any recommendations?
Well, so Hiral, out of the 4 names that your colleague was just mentioning, we are positive on Olectra Greentech, Ashok Leyland because of the Switch mobility, and of course Tata Motors. And my sense is that this is just the beginning of the change that we are going to see, as we were discussing about the gas distribution companies. So there is going to be more and more such changes, not only at the center level, but also from the state utility or state transport utility. So that's going to be more positive in terms of gaining more orders for these companies.
But Brijesh, I'll also come to you. JBM Auto, Olectra Greentech, Tata Motors, Ashok Leyland, any of these counters look good on the charts at current levels?
Yeah, I'm pretty confident that all these 4 stocks which we spoke look extremely good from the weekly point of view, and it looks like the near-term bottom for this, all the stocks are done, followed by Tata Motors also. So near-term outlook is quite extremely positive, and I won't be surprised if we see another 30-40% kind of a gain over the next quarter or so. So view is extremely bullish. Somebody wants to take a long bet should initiate a trade in this.
So that's a bullish call coming in as well with regards to few of the auto majors that could be one of the suppliers of the 10,000 buses that the union government is looking to procure in the EV space. But completely out of time. It's a wrap on this edition of Profit Buzzers. Thank you, Brijesh. Thank you, Gaurang, for joining us in as well. And a thank you from Mihika, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You are watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, not much of an action in the markets today. It's largely flat, just 20 points down, right?
Right. What we are looking at in Nifty is in just like a little bit of red, currently seeing cuts of around 0.14%. The latest news that we're looking at on our screens is, of course, on the China tariffs being at the number of 245% here. So that is something to keep in mind. But in terms of where the benchmark indices are headed today, almost flat action that we are seeing. Global cues also kind of an indicator of that. Nifty Bank, we are seeing around 0.7% of an up uptick in trade today. So strong moves for the Nifty Bank that we are looking at. But in terms of where the point contribution table is, if we are seeing for the benchmark indices and Nifty 50, Axis Bank, ITC, Bharti Airtel right on the top that we are looking at. IndusInd also in favor today because of the lower number that we are looking at in terms of the derivative discrepancy that is there on what was expected. However, if you are looking on what is leading the drag is something like an Infosys, Reliance Industries and Bajaj Finance, which is under pressure. So this is as far as where the Nifty 50 is concerned. In terms of where the Nifty Bank, as you've said, about 0.7% of gains here. Let's also have a look over the sectoral chart if you can see where the sectors are headed today. So it's a mixed bag that we are looking at in terms of the charts over for the sectoral indices. Nifty PSU Bank leading the top at the top here with about 2% of gains here, followed by something like a Nifty Media and Nifty Oil and Gas seeing gains of around 1% each. While on the other losing side, we are seeing something like a Nifty Metal and Nifty Auto under pressure, seeing cuts of around 0.58 to 0.59% each. But let's also talk about the broader markets, what's happening there in terms of where the Nifty Midcap 150 is concerned. Let's pull that out. We are seeing almost flattish movement here as well as following where the benchmark indices are headed in terms of where the stock-specific action is concerned. We are looking at some strong gains in counters like NTPC Green, IREDA buzzing on the back of its fourth quarter results, Indian Bank also up around 4%. While on the losing side, we have something like a Coromandel, which is down about 4%, along with something like a Lupin, with cuts of around 3%, along with Sona Coms, which is seeing about a 3% cuts. In terms of where the small cap 250 is concerned, small cap 250, however, is in favor in terms of where the mid cap 150 and the overall benchmark indices seeing gains of around 0.55% in trade today. Some of the strong movers here includes JBM Auto, MCure and DOMS, while on the losing side, we are seeing something like MGL and AstraZeneca seeing cuts of around 3 to 4% each. So this is as far as where the broader market action is concerned, Thomas, right?
Yes, but the big news is coming in the pharma space. Lupin and Zydus. Zydus, in fact, is the top, if no loser. It's related to one of the patent that they have, or one of the litigations that they have lost, which could result into not only stopping the drug supply, but also big penalty that could come in for Lupin and Zydus. Let's get in Varsha with more details on what's been buzzing.
Yes, thank you for that. So the two companies are in focus, Lupin and Zydus. Now we all know because they've lost the litigation on a particular product called Mibigron, which treats overactive bladder. Now there was a court case which was going on with the innovator company for this product, and the decision has gone in favor of the innovator. Now previously if they actually had got US FDA to launch this generic drug, and both the companies were selling the generic version in the market. Now why this is important and why the stocks are reacting, because this product is actually very important when it comes to both the companies. This contributed meaningfully in Q1 FY25 for both of these companies. Trick contributed almost $35 to $50 million of sales and 15% of EBITDA in first quarter of FY25 for Zydus. And also according to consensus estimates, they were expecting $120 million and $40 million of contribution in sales for FY25 and FY26 for Zydus from this product. And for Lupin, it likely contributed almost 7 to 10% of EBITDA and $15 million sales when it comes to Lupin. Now both these companies will have to withdraw this drug from the market, and they could see some financial penalty from the US court.
Right. Sneha, coming to you on this. In fact, first welcoming our guest, Sneha Poda, Vice President Research Wealth from Motilal Oswal. Well, Sneha, coming to you on this Lupin on Zydus Life, do you see this as a very big negative, or this is something that they could pass through this, or they could again file an application on this drug or on this litigation?
Okay, so basically, see, in the current scenario, obviously this will be a little dampener in the short term, from the short term point of view. Obviously, like over the medium term, they can again reapply for it, but in the near term, the sentiments will get affected. And moreover, given the fear that the tariffs might be imposed by Donald Trump, so this is already keeping the pharma overall counter under pressure. And with this news coming in, so the pressure might further escalate. So in the near term, there will be a little dampener from this news.
These stocks that we're talking about, Lupin and Zydus Life, heavily down under pressure in trade today. But let's also talk about some of the auto companies which are there. In fact, what's the news here is media reports suggesting government may soon launch a tender to procure about 10,000 electric buses, a move that could benefit multiple players within the automotive segment. Who are these players? Puneet joins in to tell us more on this.
Well, thanks for that. So definitely a positive move coming in from the union government, looking to procure 10,000 electric buses very soon. Now, the Ministry of Heavy Industries is expected to float a tender sometime in May of 2025, so not so much far away as well. Apart from that, this will be procured under the PM E-Drive scheme, which was announced in 2024. Now, CESL will be issuing these tenders for intra-city movement, specifically for passenger carriers. And the subsidy could be approximately 3,000 odd crores. Now, do note that in the PM E-Drive scheme, the total subsidy for subsidizing the purchase of electric buses was roughly about 4,391 crores. And this 3,000 crores will be coming in from that aspect. In the PM E-Drive scheme, they were looking to subsidize roughly 14,000 odd buses, electric buses specifically, and these number of 10,000 is also coming as part under this particular PM E-Drive scheme. Now, players such as JBM Auto, Olectra Greentech, Ashok Leyland as well as Tata Motors are now in focus. Now, specifically for JBM Auto, the company has a bus capacity of 20,000 electric buses manufacturing in a single year. So definitely a key beneficiary there. Apart from that, Olectra Greentech also has an order book of about 10,000 electric buses, and Ashok Leyland, which manages the Switch India facility specifically for its electric bus segment, could also be another key beneficiary. They have roughly about an order book of 1,800 buses at the end of Q3 of FY25. They've also recently mentioned that they will be only looking to enter into contracts for an outright sale of electric buses and not get into a GCC contract, which has deferred payment over 12 years. So another key beneficiary could be that. And finally, Tata Motors, of course, they've already sold roughly 3,500 electric buses over the last 3 to 5 years. So definitely these 3 to 4 players, specifically in the electric bus segment, could be big winners going forward. And the new state budgets advocating this, such as Maharashtra as well as Delhi, for electric buses could be some of the key beneficiaries, apart from 9 cities that are targeted under this new scheme for 10,000 electric buses.
Okay, thank you, Puneet, for sharing in those details. Sneha, coming to you, a couple of players that Puneet was talking about which could benefit from this government grant that we're looking at, which includes the likes of JBM Auto and Olectra Green, which are buzzing in trade today as well, along with something like Tata Motors and Ashoka Leyland also, where there should be more focus on. I want to understand your view on any of these stocks and if you have a pick over here.
Okay, so obviously there's a big order, and these players are likely to benefit. In fact, if I have to recommend a stock, I would in fact go for Ashok Leyland. So in case of Ashok Leyland, the company has been quite active in case of electric buses, and if we look at their Switch India subsidiary, that is expected to break even in Q4. So hopefully this positive news comes with the result announcement. So at EBITDA level, they are supposed to break even this quarter, and at the PAT level, they are supposed to break even by FY26 end. So we are quite positive on Ashok Leyland because the order book which they have in electric buses is quite robust, and if they manage to win this will further add on to the overall order book. So we believe that one can pick and choose Ashok Leyland. With regards to Tata Motors, there are lots of ifs and buts because it has got a huge global presence. So Tata Motors, I would suggest to avoid at this current level. And in case of Olectra Green, though this counter has corrected a lot, but the valuations I feel is still a little expensive. So my pick would be Ashok Leyland, where the valuations are a little comfortable compared to Olectra Green, and the Switch, if it manages to turn profitable, then that would be a big booster.
Right. Another pharma stock that has been buzzing in trade is Hikal on the back of strong volumes. Let's get in Varsha again to give us more details on Hikal.
Thank you for that. So yes, if you see, volumes are trading at 9x of its 30-day average, and the stock has seen an intraday high of almost 10%. Now, if I were to talk about the growth prospects for this company, well, this company provides an API and intermediates to basically they are into B2B business, providing APIs, research services, and intermediates. Now, pharmaceutical contributes almost 62% of their overall revenue, followed by crop protection at 37.5%. Now, they are targeting high teens CAGR growth over next 3 to 5 years, with they are aiming to exceed 20% of EBITDA margin, and their animal health project is the next big growth for the company, for which they are targeting almost 400 crores of revenue in the next 5 years. And the crop protection sector is expected to stabilize with the domestic demand. The new multi-purpose facility at Panoli is expected to ramp up in next 2 to 3 years, and the capex guidance for FY25 is around 140 to 150 crore, while for FY26 it's around 150 to 200 crores. Therefore, if I were to talk about their API business, several projects are actually moving towards validation and commercialization, while for CDMO business, where animal healthcare is one of their CDMO projects that they've got, they are also progressing towards commercialization, and the strong pipeline with 13 to 14 products are into various stages of development. And lastly, on the animal health contract, they are seeing significant traction with a new product pipeline and healthy inquiries that are coming in for the company, and they're expecting commercial sales to commence from FY26 when it comes to animal health business.
Right. Sneha, any views on Hikal? Have you tracked this counter?
No, we don't track this counter as such. I mean, we don't have it under coverage, but my view is that since they are into crop protection business, so with the good monsoon that is expected, this counter is likely to do well. And as mentioned, since couple of their products are in the pipeline for commercialization, so that will further drive the growth. But yeah, we don't have the coverage on this counter.
Okay.
Right.
Right, so that's in regards with Hikal that we are looking at. But another counter which one should focus on is something like Bharat Forge, and this is after Morgan Stanley has maintained an equal weight on the stock. My colleague Puneet joins us with more details on this.
Well, thanks for that. So definitely the US is currently in a big slowdown, and that's roughly 41% of the standalone revenue for something like a Bharat Forge, and that's what Morgan Stanley has mentioned, that they've said that, you know, the US machinery team has also lowered the guidance for Class 8 truck market going into FY26, and Morgan Stanley believes that they will only see a modest increase, if any, in 2026. They maintain the equal weight target price of 1170 rupees per share, and they have said that, you know, any kind of growth guidance will only come in the second half of FY26, and specifically that could happen if the pre-buy gets triggered because of the EPA norms. But overall, you know, we've also spoken to Jonathan Starks, who's the CEO of FTR, and they track the Class 8 truck market very closely, and they mentioned that as of now they're not anticipating any growth in FY26, and if these new norms under the US EPA is delayed, which is essentially the green norms, if delayed in 2027, could be another, you know, big fall in terms of earnings for something like a Bharat Forge. So overall, it's a slightly negative tinge and negative tone that, you know, Morgan Stanley has taken, and the US market slowdown is expected to hurt something like a Bharat Forge going forward.
Okay, so that's the view that we are seeing for Bharat Forge. Thank you, Puneet, for those details. Sneha, coming to you, your view on the stock?
Okay, so even we are not really bullish on the counter, because as we know, the US truck rate segment is not doing well. Even the defense segment, they somehow there has been a delay in the ramp up of this segment. So both the divisions are not doing well. So we are really not expecting good numbers even for Q4. So my suggestion would be to avoid the stock at the current levels.
Right. Well, a couple of city gas distribution stocks that remain in focus, IGL and MGL, and this is on the back of the fact that the government has reduced the APM gas allocation. Now, we had indicated about this back on April 11th, Friday, that the government would reduce the APM gas allocation from 51% to 40%, and that is the notification that has come in. For IGL, the APM gas allocation has cut down by around 18%, and for MGL it has come down by around 20%. Now, this reduction in APM gas will actually be replaced by the gas that will come in from the new well gas, and this is a positive announcement, in fact, which has come in. Now, though this replacement of APM with the new well gas will increase the overall gas cost by around $1.3 per MMBTU, but the new well gas is much cheaper when compared to other sources of gas like Henry Hub, oil-linked LNG, difficult field gas. In fact, spot LNG, if you compare with the new well gas, it's $7 per MMBTU more expensive. Unlike last time when the APM gas allocation was reduced, city gas distribution companies had to rely on these other sources, which they do not have to rely this time, and they will get new well gas, which is much cheaper compared to these other sources. In fact, analysts believe that if IGL and MGL were able to replace these volumes with new well gas, then the margins could improve sizably going forward. So keep an eye out for IGL and MGL in trade. They both are down in trade today, but it would be important to track how the margins move going forward. Sneha, have you tracked or have you seen this news bet which has come in on the city gas distribution companies where the APM gas allocation has reduced, but the positive news this time that has come in is that this will be replaced by new well gas?
Yeah. So, according to our estimates, roughly, post this news, the impact at the EBITDA per SCM level will be roughly about 8% for IGL and 4% for MGL. Now, but what we believe is that though there's an impact on the EBITDA per SCM, but the margins will not be impacted to this extent. The impact on margins will be quite lower, and we're assuming that the companies might go for the price hikes, and which will help to somewhat offset this hit on the EBITDA per SCM. And we are assuming that the new well gas pricing will be about USD 9 per MMBTU, or it would be above that. So it really depends upon what the pricing is and whether the companies are able to take price hikes. So depending upon that, the margin hits will be known. But so far, it looks like the impact on margins will be somewhat a little lower. So the counter could consolidate for some time till we get the further clarity.
That's the views that we are looking for the city gas distribution companies. But another stock which is in focus on the basis of its higher volumes is something like ITI Limited. Now the volumes today, if you look at it, it's 5 times compared to its 30-day average. But let's see if there's some fundamental news or what's the developments happening in this space. We have Puneet joining with more details on this.
Well, thanks for that again. We've seen the new BharatNet projects essentially being a key trigger for stocks like ITI as well as, something like a Tejas Networks. And, ITI has been in focus because of that as well. Now, the company has announced on 9th of April that they had secured an order and emerged as, L1 for BharatNet 3-stage project. They specifically mentioned that this was from the states of Himachal Pradesh, West Bengal, as well as from the Andaman and Nicobar Islands. And the total order value was almost 5,000 crores specifically for this particular order. This is, of course, in package 8 and 9, which was announced over the last couple of months. Now, the development will be of middle mile network of BharatNet projects, and in this particular quarter, it will be key to watch out for in terms of, when the other, if ITI had, bid for the other contracts as well, and when is it expected to open in terms of order trending, because we've seen that kind of positive impact on stocks like Tejas Network. But ITI has been buzzing on that aspect ever since the last couple of weeks, and going forward in Q4, the commentary of further, getting such orders from the BharatNet projects will be something to watch out for.
Huge order wins for the company, something that we've been seeing in this counter. But Sneha, coming to you, do you have this stock under your coverage? What's your view on ITI Limited?
Okay, so we have it under coverage, and what we believe is that though these developments are positive, but then at the same point in time, the key thing which needs to be watched out for IDEA is that the subscriber base, where they have been continuously losing to Bharti and Jio, so that has to reverse in order to get the traction. Moreover, despite the government coming in to support IDEA with regards to the dues that are pending, but even after that support, there will be substantial dues with AGR dues which will be pending, and that needs to be paid over next 2 years. So the company might have to further resort to the fundraising. Thirdly, they have to do a lot of catching up in terms of capex in order to be ready with the 5G deployment. So Bharti Jio are way ahead in terms of capex on the 5G front, whereas IDEA is lagging. So these are some pointers which will keep the counter under pressure. So there might be ups, there might be bounces that we may see in between, but unless and until we see clarity on these points, the stock will continue to hover at lower levels.
Right. Moving on, GQG Partner and LIC have cumulatively increased stake in Adani Group companies since the last quarter. Let's get in Hiral with more details on this one.
Thank you so much. Absolutely, it's the Adani Group of companies that are in focus. And firstly, you have GQG, which has actually doubled down on Adani companies, and they've gone ahead and raised the stake in 5 stocks. If you talk about Adani Enterprises, from the third quarter to the fourth quarter, the stake has come up from 3.67% to 3.84%. If you talk about Adani Ports, that's the only place where there has been a marginal downtick that has come in. Adani Greens has seen an increase from 4.21% to 4.49%. Let's look at the other companies as well. The stake has gone up. Adani Energy has seen a marginal increase from 5.1 to a 5.23. Similar trends in terms of Adani Power as well as Ambuja Cement, though, has seen a marginal downtick. So that's with regards to where GQG partners and entities go and their stake in Adani Group of companies is concerned. But moving on, if you have to look at what LIC has done as well, in Adani Enterprises, Adani Ports, as in both these companies, the stake has gone up marginally. Adani Green LIC stake has remained stable at 1.36%. And look at the other companies as well. From Adani Energy, again, it's remained pretty much stable. Power has gone up from a 5.07 to a 5.55%. And Ambuja Cements has seen an increase from 6.57 to a 7.69%. What's interesting over here is the kind of the quantum of increase that has happened with regards to the group companies between GQG as well as LIC. So there is the DII as well as NRI focus that is coming in, where the stake has been increasing, and this is happening in challenging times as well. So interesting moves with regards to the group companies.
Okay, thank you, Hiral, for bringing in those key details for the Adani Group companies that we are looking at. Do note that the channel that you're watching is part of the Adani Group network, so take a note of that. But let's take a look at some of the BFSI counters on focus on the back of their fourth quarter earnings as well. Here's Harsh to give us key details of the likes of ICICI Lombard, IREDA and ICICI Prudential.
Yeah, so I'm going to first start off with the Lombard. I mean, yes, the combined ratio, which is generally the metric we look for, has come in slightly above our estimates, but largely in line set. And what really stands out here is the top line growth. The top line growth has come in at 20% YOY, which is the net earned premium has grown nearly 20%, 19.6% YOY, nearly 4% sequential. That number looking extremely strong. They continue to guide for very, very strong double-digit kind of retail health or rather growth in the retail health segment. So that's one thing to look out for. That's the real positive. The claims have obviously been elevated or rather slightly higher than expected, and therefore your combined has been slightly higher than expected. That's how it's looking. But overall, a strong set of numbers. IREDA also very strong results. Now, we've spoken about how the Gensol exposure could well impact IREDA, but at this point, the overall numbers don't seem to suggest that. 38% growth on the total income number, 40% on interest income, very strong growth on the NII front as well, and PAT growth of nearly 50% YOY. The provisions number has spiked a little bit. That, to be fair, is understandable because it's off a low base. But nonetheless, you're seeing a very, very solid set of growth numbers as well. 11% QOQ on the loan growth number, 28% overall as well on the loan growth number. So very, very strong numbers overall. ICICI Prudential, last off, you're seeing APE growth of -4%. So a slightly muted number on the APE count, below our estimates, marginally below our estimates as well. Value of new business largely in line, and that's taken the VNB margins higher. The product mix seems to be improving, which is the key positive in this particular quarter. A thumbs up only on the basis of the fact that we've started to see a bit of margin recovery, and the guidance seems to suggest that APE growth will be slower than VNB growth, which means that margin recovery will continue in FY26 and 27. Of course, some cuts in terms of estimates by brokerages, but nonetheless overall looks like a positive count.
Okay, thank you, Harsh, for bringing those key details. Neha, quickly coming to you on these three counters which are buzzing on the back of their fourth quarter results. What's your view on something like an IREDA or ICICI Prudential that we're looking at?
Okay, IREDA we don't track, but ICICI Prudential we are quite positive. So when we look at the numbers at the PAT level, the numbers were in fact a huge beat to our estimates. Now what has happened is that though the AP growth was a little muted, but then the VNB margins has expanded, and that has been largely because of the shift in the product mix that we have seen. So the revival in the non-linked business and the momentum in the high margin ULIP products led to the margin expansion during the quarter. And even going ahead, we believe that the margin expansion will continue for the company. So we are positive from that angle because the product mix is improving, and that has been a calculated effort which has been taken by the company. It continues to focus on improving its margins rather than focusing on the APE growth. Even in APE growth, they are targeting more than the industry growth of 15%, and VNB growth they are targeting higher than the APE growth. So ICICI Prudential we are quite positive. When we come to your ICICI Pru, so the general insurance industry, the FY25 was not good for them because of the regulatory, a lot of changes that has been done on the regulatory front. But from FY26, we are expecting some sort of recovery, and it's looking at focusing on the motor segment and the health segment, wherein they are expecting good double-digit kind of growth. So we are seeing some signs of recovery. And in fact, it is reflecting in the April month data as well with the channel checks that we've done. So some sort of renewal recoveries are being witnessed from this month. So gradually, FY26 should be better for them. So we hold a positive view for both of them, but our preference will be for ICICI Pru over ICICI Lombard.
Right, Sneha. Well, Sneha, thank you for joining us and giving us your perspective about the markets and the specific stocks. Well, with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit. India Market Close up next.
That's huge. That is a biggie. It's out of
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases. So keep an eye out for IGL. Now this stock had to, the company had in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down. But they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
All packaged food companies should shut down. Packaged food as an industry, they've been telling us half-truth. Our mission is to rebuild the world's trust in its food. That's why if half-truths are the problem, then the whole truth has to be the solution.
So these half-truths that you're talking about, Shashank, did you encounter them in your first big job?
They're saying no added sugar, but it has a ton of sugar in it. Replaced my cola with a healthy fruit juice, only to find out it has the exact same amount of sugar as my cola.
How your own personal journey has led to the creation of this idea.
Yeah, I was a super fat obese kid and I lost weight. In 3 years, 30 kgs came back.
How many times a day would you have your own products?
Oh, at least 2.
Any of your products, would you say a meal replacement?
If you have 1.5 protein bars, then it will become a meal replacement, not 1 bar.
Dal chawal or protein bar?
Dal chawal.
To India specifically, I really think India has a fascinating opportunity
because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Quickly, a check where the Nifty is. We're at the day's high where the Nifty 50 is concerned. We're up around 1/3%. Thereabouts 23,400 breached, but it's just about been breached. So let's pull up the Nifty intraday, and there you go. You can see that sharp spike on the Nifty. I wonder what's causing that. And let's pull up contributories pretty much immediately. Try and zoom in because this spike is quite sharp. And Axis Bank and HDFC, so banks leading the charge clearly. Then there's Bharti and ITC. Let's pull up the heat map as well. Try and see what Axis is doing because second day in a row now, Axis is up 4%, nearly 4% plus. IndusInd up nearly 7% now. Second straight day where IndusInd has done 6 to 7%. So very, very strong moves on both of those counters. And private sector banks as well as PSUs enjoying a good day. At least in trade, and LIC is up 1.25% as well. Let's pull up the sectoral heat map. We'll probably see that PSU banking index up 2.2%, private banking index up 1.7%, and Nifty Bank up 1.3%. So that's leading the charge at least on the Nifty 50. And we'll pull up the intraday on the Nifty Bank in just a minute. Let me cover auto, which is down 1/3, IT down 1/3, and pharma down 1/4%. So those under some bit of pressure. But that's how it's shaping up as we enter the last hour and a half to close. Let's look at the Nifty Bank intraday, and likely that spike will get mirrored. The Nifty 50 spike is getting mirrored here on the Nifty Bank. Can we also have the Nifty IT? And I want to see whether this move is there on the Nifty IT as well. Well, not so much. Clearly not. Okay, so we've seen a bit of a spike on the Nifty IT as well. So yes, we're seeing a decent spike across sectoral indices, at least the heavyweight sectors seeing that. And we're off the day's low where the Nifty IT is concerned. So that's the other positive. But the Nifty 50 is at the day's high. Let's look at the advanced decline very quickly before I hand it over to Neeraj for broader markets. But there you go. The advanced decline is 2:1. It's in some sense been slightly more choppier than what it has been over the course of the last few trading sessions where it's just been one way in terms of how the advanced decline has been, and therefore slightly more choppier, but nonetheless we're very, very comfortable in terms of the breadth in that sense. Neeraj.
Yeah, good breadth. Small cap index doing well and a clutch of stocks flying around. Just very quickly mark a few. So the winners, GMDC, 12%. Actually, there's a lot of conversation in market circles about a large noted investor buying heavily into GMDC. But some of the PSUs, by and large, GMDC, NTPC Green, EIL, IREDA is up about 6.26% as well. So a lot of ITI up about 5%. So a lot of that variety of stocks have done well. There is strength in JBM Auto with recent DOMS Industries on news. So that's the other set of names which have not, let's say, not had a bad outing today. And also just a set of stocks in which we are maybe seeing some sharp moves. Now, we spoke about the Nifty itself having a fairly sharp move, and you saw what's happened to IndusInd Bank and a few others. But there is Ajax Engineering, which is up quite significantly in the last few minutes of trade. So keep an eye out for that. Bombay Burma has some spikes. IPL or India Pesticides has some spikes. So those are a few names that you want to keep an eye out for. Now, the other development that has happened as news has floated in is that GQG Partners and LIC have cumulatively increased stake in the Adani Group companies since the last quarter. Hiral Johnson with more on this one. Hiral.
Thank you. So clearly you have GQG, which is doubled down in terms of Adani group of companies. They've gone ahead and raised stake in nearly 5 Adani group companies. If you see the kind of numbers that we're seeing, Adani Enterprises, the stake has gone up from 3.67% to a 3.84%. It's only Adani Ports where there has been a marginal downtick that has come in. Again, an increase that has come in terms of Adani Green as well, from a 4.21 to a 4.49. So that's the first set. If you talk about the second set of companies as well, in terms of energy, the stake has gone up. A marginal increase has happened in terms of Adani Power as well. And if you talk about Ambuja Cements, that's where you've seen a marginal downtick. And this is mainly if you talk about the legal shadows that have begun to recede, as well as if you talk about the global sentiment as well. That is also seeing some bit of stability that has come in. And you have one of the most loyal backers of Adani that is back on the buying table and big time. Now, you talk about aggressive accumulation that is happening in the month of March quarter comes, and this is at a time when there has been turbulence with regards to Trump's tariff blitz, and that has rattled emerging markets again in 2025. Now, let's also look at what LIC has done with regards to the group companies. Enterprises, there has been an uptick that has come in from an LIC. They've gone ahead and increased stake in Adani Ports as well. Their stake in terms of Adani Green has remained absolutely stable. And if you see the other set of companies with regards to LIC, Adani Energy again has remained stable, whereas it's gone up in terms of Adani Power as well as Ambuja Cement. So clearly, I think it's 4 companies in terms of LIC where they have gone ahead and increased stake. So clearly, it's the Indian mutual fund industry which is also increasing stake in terms of Adani names such as Ports, Green Energy, Energy Solutions, and even LIC, as we already mentioned, has gone ahead and increased stake. In fact, Ventura Securities and Jefferies are the ones who have started to have a positive outlook in terms of Adani Power as well as Adani Ports as well.
Okay. Thanks a lot for that, Hiral. So interesting buying happening in select names. We've seen that happening selectively in a clutch of very bottom-up specific sectors. But here, that group has seen some buying. That Devin Choksi looks at multiple things, but also conglomerate stocks very, very closely. Johnson right now for some perspective. Devin bhai, so good having you. Thank you so much for taking the time out. And would love to know, what do you think about this? Is this value buying? Because, I mean, GQG's name in India rose to fame when at the peak of the Hindenburg issue, they made some very large investments in the Adani Group.
Hi, Neeraj. Good afternoon. Well, not very surprising, though, that they have bought in the last quarter the particular stake, largely because of the market condition also favored them, I think, at lower levels. Frankly, the fundamentals of the businesses of either you look at Adani Enterprise or Adani Ports, or even for that matter, Energy Solutions or Greens, they remain absolutely, I think, convincing as far as I think their execution plans are concerned. I think they are on track. So from a perspective of buying at lower levels, I think it's something which is justified, particularly when I think you are already invested about 80,000 crores in the group over last couple of years in which I think you invested. So certainly they have added, I think, marginal stake increase. As I see it, I think a couple of developments are favoring them. In case of Adani Enterprise, in this year, that is financial year 25-26, 2 of their main properties, call it, I think, the businesses, the airports and the roads are likely to get demerged out of the main unit, that is Adani Enterprise, which has incubated these businesses. They are likely to get separately listed, and that's where probably I think one is going to get the advantage of buying Adani Enterprise stock, I think, to get the advantage of the shares coming in from these 2 companies. It is expected that both these companies, the airport and the roads, both are cash generating machines. And it's expected that some of the large investors, infrastructure investors included, for the sake of buying businesses also which are generating cash, I think they would probably get into this particular business. The port, once again, I think is showing a robustness, already touched 500 million metric tons of the business on cargo handling side. And I think going ahead, along with the mix in the international market, going ahead, I think they are talking about increasing the cargo handling to 750 million to gradually to about 9 million metric tons by the end of 27-28. So it looks, I think, a very strong proposition for anybody to look at this particular business from a perspective of seeing the growth into it. And likewise for energy solution, which is in transmission and distribution business, which is again, I think, a big cash cow. It basically, I think, suggests that this all businesses are well integrated, driven by the domestic economy factors, and certainly working well as far as I think the long-term investment is concerned from the perspective of large investors.
So this is Harsh also joining in. Great chatting with you. So wanted your take with regard to cement, because there's just so much happening within that sector. There's pricing, which is an issue. There's consolidation, which is playing out. And you have these two large players, ACC, Ambuja, both of which are Adani Group stocks. What within cement and how should one play it? And would ACC, Ambuja disproportionately outperform in that sense compared to the others is really what I want to understand.
So my understanding of this business is fairly simple. On one side, you have got the raw material, which is limestone. On the other side, you have got a complete logistic under your control, be it, I think, inland water transport arrangement, or be it, I think, the railway cargo arrangements. I think you have a complete handle on this particular aspect. So logistic cost management gets taken care of with the infrastructure that is there in the port as well as railways. And the raw material, which is including the limestone mines, and at the same time, the lower energy cost, I think, which is basically helping them. On one side, they're implementing the green energy. On the other side, I think they're adding both Ambuja as well as the ACC, systematically a mix of blended energy, which is, I think, from the agri-waste as well. So in my viewpoint, I think they are basically taking care of on input as well as output, I think, cost management systematically. And unarguably, the cement as a commodity is basically finding higher and higher demand every stage. With the cost factor remaining low and the demand remaining on a higher side, with the increased capacity utilization, it promises to increase higher amount of profit in the current year as well as in the next year. So from a perspective of looking at commodity, which is driving the growth and the cash is generated along with, I believe that I think this is probably becoming, I think, an important play for Adani, given the strength that they have in both these areas, the input as well as output, as well as distribution.
And so that aligns well, because the way LIC has hiked its stake, and I want to flag this off, from 6.4% in ACC in March of 2024, it was just at 6.57% in December of 2024. Now sitting at 7.7%, so sizable increase. They've literally bought 1% of the market cap of ACC in one single quarter. That is LIC. Of course, and known to be a value buyer, right, in that sense. What about green energy, sir? Prospects there? Is there value in that business?
Well, yes, I think the best part is that initial phase of putting larger cash and remaining, I think, cash deficient, I think that stage is getting over. Largely because of the fact that I think you're putting across 50 gigawatts of energy, green energy, capacity by 2030. And today, as they complete different modules, they start generating the cash. So to a greater extent, I think the cash which is being generated is being deployed for creating the further expansion. So to a greater extent, I think this is an automatic machine in a way, if you want to call it as, wherein the cash generated is getting deployed into the expansion part of the activity. In my viewpoint, I think the cost of implementation on a per megawatt basis, as far as the green is concerned, is actually coming down because of the use of the better technologies, etc. And that is possibly also helping them in having the better amount of, I would say, profitability factor we are getting established for that. So one can remain confident about it. Of course, I think the energy, the green is basically, I think, right now quoting at a valuation which is not extremely cheap, but at the same time, if one is having a view for next 3 to 5 years, certainly at some amount of time and price correction, one can buy this particular stock into the portfolio. That's what our view is.
I have one final question, Vinbhai, and that is on the flagship with the Navi Mumbai airport round the corner, the airports business getting a lot of traction, and some of the other businesses reaching a really sweet spot in terms of size and operational metrics. What's the thought here? Hasn't really performed, and maybe because of that valuation, it seems to be a logical buy for a large investor like GQG. But what should a retail investor do? Adani Enterprises.
Yeah, Niraj, I think the airport business to me is a daily cash generating business. I think your road and the toll business that you have. And I think what they are possibly doing is creating an expansion in this space as well, wherein your existing airport operations, I think, are expanding to the new airport that you are acquiring as well as building. I think that is continuously going on. So in my viewpoint, I think this business will continue to generate cash. And as I always call it, this is a business, the road as well as airport, which are heavily capital intensive businesses. They are largely good for, I think, some of the large funds like sovereign funds, insurance funds, pension funds, or for that matter, I think the hedge funds which are focusing largely on the infrastructure side of the story. For them, I think they remain good because it provides you the discounted cash flow visibility over the next 25 to 40 years because of, I think, the inherent operations that they have built into this space. So yes, I think I don't know about retail investors, how much patience they would have for continuing with this kind of investment, which is demanding higher amount of infusion of capital also from time to time. But I think for such kind of large institution investors, I think this business remains, I think, an attractive proposition to build the fund.
Okay, all right. Thank you so much, Devinbhai, for coming in, giving us that perspective. Of course, the headline being that both LIC and GQG, known as deep value investors, have hiked stake in most Adani Group names. Thank you so much, sir, for giving us your perspective on why that may have been so. But from one conversation to the other, we'll go from micro to macro. We have Ankita Pathak, who's a macro strategist and speaks about global equities as well. She's a fund advisor at Ionic Asset, joining us this afternoon. Welcome, Ankita. I want to first start off by understanding how you're seeing the global setup at this point. You have US, which has hiked tariffs on China further by 200, or rather now making it 245% a tariff on China. With this entire battle playing out, how does India stack up, and what is your strategy globally with regard to where you're deploying?
Hi, good afternoon. It's a pleasure to be here firstly, and I think a bang on question. I think at this point it really doesn't matter whether it's it's 200%, 300% of tariffs, because this news is going way farther than what we would have imagined. So I think there are three possibilities here. One is that this is a US-China war. Everyone else is just looking at it from a viewership perspective, and within US-China also, they are smart enough to not have it on commodities that matter, right? So you saw US exempt smartphones, semiconductors, etc., which was, I think, a it's a smart move because US big tech needs this. Then the second case is that this war actually escalates, and that is when the other countries need to start putting retaliatory tariffs because someone needs to, nobody wants to bear the brunt of it. So there's excess supply in the market that China will now hold. Where will it go to? Will it go to Europe? Will it go to India? Will it go to Latin? And therefore, will these countries have cross tariffs happening? In my opinion, this is the worst probability that could happen, which will lead to a lot more volatility, I would say, in quarters ahead and not just months. And then the third outcome, which is, I think, the best case possibility, is that, China and US sit on a table, they get this out of the way. Maybe you'll have headline numbers which are obnoxious, but for commodities that matter to the rest of the world globally, those will be out of the tariff zone, and basically the trade will continue as is. So this could be the war more of words than of substance. So if I were to go probability wise, I think the first outcome that I mentioned, that this is a US versus China war, everyone else is now holding their seats just to see how this unfolds. I think that is where where the 70% probability is. I would still say there's a 10% chance on this escalating. And I think 20%, the best case scenario, is where the two countries also solved for themselves. Now, within this, how we are investing globally has become very, very, I would say, interesting for us also. So from a very top-down perspective, I think Europe as an economy in itself is coming out strong. We've seen, flows move from US to Europe. We've seen Europe also do a lot more fiscal stimulus, revive of the defense expenditure. And it's also coming from very, very low valuations equity-wise. So I think that has come out as a great space to be, which is not subjected to as much volatility as US and China right now is. So that is one space that we are watching. Of course, we also are not fully dismissive of the US and China market also, because within these markets, there exist businesses that don't depend on each other economy for supply chains, revenues. And because the major indices are getting, thrashed, and you see these whiplash movements in the indices, it is indeed a great time for an active manager to find opportunities which are fundamentally good businesses. And now I think in next 3 to 6 months, these businesses which were historically trading at about, I would say 30 times forward PE would fall under 17 times forward PE and would become attractive again for the next cycle.
Ankita, would you taking large allocation calls right now, considering the situation is fluid and maybe talking about valuations or prices might be less material currently, or are you taking those bets right now?
No, so we're taking very, very cautious calls. We are holding large amount of cash. There is obviously fundamentals, there is good businesses, but there is also a lot of uncertainty. And I mean, let me just bring this example up when, Trump said that smartphones, etc., are exempted. And then yesterday he said, all your big tech companies did really well for a bit. And then yesterday he said that, one kind of a chip is a H20 chip, which NVIDIA could send it to China before. They can't do it anymore. And then you saw that volatility kick in, and all of these tech names were also slashed. So this has nothing to do with fundamentals. This has nothing to do with, valuations, etc. But I think for us, we are holding cash and we're looking for opportunities where this impact is the least as, and could be the least. The best way to do this is that when you're doing US companies, don't do companies which have a very strong supply chain from China or revenue from China. Similarly, when you're doing China, don't do companies which are very heavily dependent on, global exports. And I think that way an active manager can protect the fund from tariff wars.
So Ankita, therefore, how should, so you're positive Europe is what I understand. You're also positive silver within the commodities basket. Are you increasing allocation even at this point to silver over gold? You prefer gold as the better commodity, silver as the better commodity? Give us the rationale.
Fantastic. So gold and silver both have been our very, very strong call at Ionic Asset. At some point, we also wanted to, tell people that 2025 is going to be the year of asset allocation. So we need to look beyond equity and maybe carve out incremental allocation to both gold and silver. So we started with saying, more gold, less silver. And this would be, about a year back from now. From there, of course, gold's returns are known to all of us. And I think at this point, it is silver, which remains like a very strong buy on dip commodity for us, also easily accessible to Indian investors now. Silver, because it is very undervalued compared to gold. So I'm sure gold to silver ratio at 90 times is at a historic high. The industries that silver catered to, especially in EVs, renewables, etc., are seeing a good demand. And if we do not see a worldwide global recession, the chances of which are very, very meager because Fed has its own tools to exercise, I think silver remains a very strategic buy on dip. And I would definitely prefer it over gold. Coming to gold, I think for investors who bought gold, we are still recommending hold and not a clear sell because I think there is still some value on the table. And this is coming from increasing and continued increase in demand. So the data has not really changed. And second, from the fact that when there is global uncertainty like this, if the risk of sentiment lingers on for another 6 months or so, I think gold will continue on the margin to do well. So between gold and silver, I would say more silver, less gold, but not a hard call on gold to sell as of now. I think there is still margin there.
Point taken. And what about the US 10-year? There's been just so much volatility there. Would you at this point, and also given the fact that there'll be roughly $10 trillion of repayments that the US will have to make or refinancing which US will have to do in calendar year 2025, would you at all look to bet on that, or do you believe that at some point you will get better pricing even there?
Sure. So I think US 10 years have become, it's a question in itself. It has broken the long known correlation with the dollar index also. So yields are high, DXY is under 100. It's an interesting macro picture to have. But let me just break down the US 10-year into what's happening structurally versus what's happening tactically. Structurally, of course, there has been a fall from domestic buyers. There has been a fall from foreign institutional buyers. And of course, we know the US's big debt problem. So the supply has been very high. So the sheer fact that demand is falling, supply is high, would lead to higher yields. That is now. Beyond this, there are also many movers of US yields today. Okay, so one, there was a huge supply that was expected this week itself, and it looks like investors have really sold their existing holdings ahead of the fresh supply. Again, there is something known as basis rate, which was used by the hedge fund managers, where the difference between the treasuries and the future could be used to make money. And the expectation is that there is a huge unwinding of this basis rate that is also happening, which is pulling up the US yield. So I think these two are very, very current factors. These are transient factors versus demand supply, which is a very, very structural factor. So I personally believe that the transient factors is something that is causing this unprecedented volatility in the US yields. We are seeing a movement of about 20 to 30 basis a day, which is unprecedented and unusual. In terms of, what would be a good point to buy a US 10-year, I think it's a good staggering point. So I personally, if the yields are hovering above 4.3% onwards, I think some exposure can be taken for US treasuries for investors who do so. And then over time, once Fed has to act, maybe it's 6 months from now, when these yields start to fall, there will be a directional play towards I would say 3.5, if not lesser on the US yields.
Thank you for that perspective, Ankita. Thanks for taking out time, coming in, speaking with us. What we're going to do is we're going to slip into a very, very short break. On the other side, we'll bring you chatter behind dealing rooms in our segment Heard on the Street. And we'll take, of course, top stock of the day, and we'll continue to take a couple of global views which are coming through. So stay tuned.
all packaged food companies should shut down. Packaged food as an industry, they've been telling us half-truth. Our mission is to rebuild the world's trust in its food. That's why if half-truths are the problem, then the whole truth has to be the solution.
So these half-truths that you're talking about, Shashank, did you encounter them in your first big job?
They're saying no added sugar, but it has a ton of sugar in it. Replaced my cola with a healthy fruit juice, only to find out it has the exact same amount of sugar as my cola.
How your own personal journey has led to the creation of this idea?
Yeah, I was a super fat obese kid and I lost weight. In 3 years, 30 kgs came back.
How many times a day would you have your own products?
Oh, at least 2.
Any of your products, would you say a meal replacement?
If you have 1.5 protein bars, then it will become a meal replacement, not 1 bar.
Dal chawal or protein bar?
Dal chawal.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
To India specifically,
Back with India Market Close right here on NDTV Profit. We should pull up the markets once because remember, since the start of the show, we've actually had a fairly decent clip on the indices and kind of maintaining that, which is actually a good sign. No changes. Volatility is still down 2%, small caps are still up 0.85%, but there is green on the screen. And therefore, it's that time of the show when we should try to know what is top of the mind of the dealing rooms. And Sumit joins in on the Herd on the Street segment. Sumit, it's so increasingly bottom up, right? I was with Sunil Singhania today, and the conversation is that it's all bottom up right now. Difficult to take thematic calls except for avoid IT. Right. So my question to you is, when you are thinking of talking to these guys, right? What are the stocks that the dealing rooms are focusing on today?
Well, firstly, again on the sell side, what is the dealing room saying about it? It's on the pipe manufacturing companies like Astral, Supreme Industries and Finolex Industries. Now, dealers are indicating that there has been a price cut, PVC price cut yet again in the month of April. This time the price cut is around 2 rupees per kg. And so far in April, if you see, the total price cut has been around 4 rupees per kg. And year to date, the prices have been cut by nearly 9.5 rupees per kg. And this price cut could have an impact on the inventory and the margins of these pipe companies. So keep an eye out for the pipe manufacturing companies. On the buy side, as Neeraj sir was asking about it, IEX is one stock where there are buy flows on the FI desk. That is what dealers are indicating. Then Paytm, again buy flows on large HNI desk. The buzz on the street is that very soon the company might get its payment aggregator license, and that's the reason why the stock is up 4% in trade today. And lastly, it's Polycab and KI Industries. Buy flows on institutional desks, both FI and DIs have been buying these counters at lower levels, is what this dealing room is indicating. And the buzz one of the reasons what dealers are probably saying is that that institutional investors are expecting strong Q4 numbers from both these companies, that is KI Industries and Polycab. So keep an eye out for both these counters in trade.
Okay, so those are some stocks for you, and also flashing at the bottom of your screen, I want to quickly highlight Swaraj Engines as well. Stock has moved 10% on the back of numbers. Have a look at some of those numbers. Margins largely flat on a YOY basis, but the growth is extremely good. PAT up 29%, EBITDA up 27%. So that's what's essentially enthusing the street, it seems. But Swaraj Engines is one of those. Let's quickly bring on board Lancelot Dukuna and Kush Bora, both of whom are joining us this afternoon. Welcome, gentlemen. Kush, let me start with you because want to know what's happening with regard to the Nifty today. It's certainly not in its element as has been the case over the last few days, where there's been a very range-bound day of trade, a gap-up opening, and thereafter a range-bound day of trade. Today, relatively, we've seen more volatility. What are the levels you're looking out for? What are the levels you're eyeing, and what are the trades you're making?
Don't be so greedy, Harsh. We've had a spectacular run over the last 5 sessions. Give it a day or two of breather, right? Will you?
Sure.
Also, I wanted to check. I mean, is that is the 245% tariff news true or not? Of course, I heard it a while back. Even you mentioned it. But I mean, earlier it used to shake markets, and it used to be stuff of memes. Slightly disappointed to say that the memes have at least gone, but heartened by the fact that even the markets are not reacting to it anymore. But maybe I shouldn't speak too soon. Now, as far as the Nifty goes, I mean, remember yesterday we spoke that it's a good idea to stay long in the market. If you're okay with a 1:1 risk-reward ratio, you could go on and create long positions as well, where 23, 500, 600, those kind of levels will act as resistance, 23,000 will act as support. That view remains. But now what happens is, with that view, the 1:1 risk-reward ratio is also taken out of the window. So I would wait for a dip closer to the 23,300 level, perhaps even slightly lower, to create fresh long positions from where my risk reward ratio becomes very favorable. Also, the 23,300 put, like yesterday, even today, has had a significant addition, suggesting that could act as a bit of a support level. So closer to those levels, about 100-150 point dip should be a good entry opportunity. If you have a long position, continue to hold with that as your stop loss. But fresh long should only be done on declines on Nifty.
Understood. And what about the Bank Nifty, Kush? Because that is showing a totally different picture of resilience.
It is. I mean, this one's not in the mood for taking that breather, right? But that might mean that you might see a round of profit booking coming in. Unlike the Nifty, the Bank Nifty has actually gone into overheated territories on smaller time frames. Also, the PCR is now approaching 1.2, 1.22. We know 1.3 and higher are the overheated zones. So for me, Bank Nifty just now would be a profit booking opportunity. Yesterday we did speak of a resistance level of 53,200. Beyond that, 54,000 comes into play. Today's high was 53,123. So not a bad idea to book profit partially, if not fully. But here too, the view remains that you might want to buy closer to the 52,000 mark, a decline of about 1,800 points or so. Again, risk reward ratio will be favorable, and as I said, it's already touched overheated territory, so some profit booking is par for the course. So Nifty long is a hold. Bank Nifty, I would suggest it's not a bad idea to take some money off the table and re-enter at lower levels.
And two stocks in particular, Kush, before I take your picks and thereafter go to Lancelot. We have IndusInd Bank up 7.5%, 7+% move, or rather 6+% move, second day in a row. Axis Bank up 4.5%. That too, second consecutive day in a row, 4+% move. What's your sense with both of these?
So if I were to pick one of the two, I would pick Axis Bank, largely because the structure is positive. The major trend was consolidation, and now you're seeing a breakout above some of the key levels. The 200-day moving average has been taken out today after some time now, about 3-4 months. In fact, first time in this calendar year. So this momentum is here to stay. We've seen the entire sector at play, where the top picks were HDFC, ICICI, then Kotak, and now finally a catch-up play on Axis Bank. So from that perspective, from a catch-up trade perspective and the increasing momentum perspective, there's a good possibility that for levels of 1,200 and about 1,235, 1,240, Axis Bank could still stretch this run. As far as IndusInd Bank goes, we know, it's been beaten down quite a bit. Here the case is that no negative news is a positive news. Not a good idea to be in a stock where such a theme is playing out. Also, it might just start facing resistance around the 800 and 825 mark. So if you have a position, take these opportunities to perhaps offload or exit out of IndusInd Bank. access, yes, you could still create long positions for levels of up to 1240, 1235.
And your picks for this afternoon, Kush?
Going with a long and a short, given the kind of caution, or not caution, but given the kind of pause markets might hit. So KPR Mills is a positive. The stock had a good run. Volumes have also picked up above the resistance level of 1020. Now, the targets on this one are 1070, 1105, 1000 being your stop loss. On the short side, I've got a pharma name, which is Glenmark Pharma. Barely participated in the kind of reversals or the short covering bounces also that the markets have seen, continue to reel under the pressure, has broken the support zone of 1360. So on the downside, your targets are 1340, 1320 with 1375 being your stop loss.
Okay, thank you for that, Coach Lancelot. Let me come to you, and thank you for waiting by extremely patiently. Two pockets which are doing very, very well in trade today and has been, and we were just speaking to Coach about that, Nifty, both on the private banking side, but the PSU banks as well. What are your views, given that there is a repo rate cut, that you're seeing around 25 basis points shaved off on most private sector banks in terms of their savings bank account rates that they're offering, and we're not seeing that translate fully yet to lending. So what's the sense? Is banking going to likely perform better than expected in this rate cut cycle?
Yeah, in the rate cut cycle, you will see banks exhibit better margins because, like you said correctly, they haven't yet reduced, substantially the lending rates. So lending rates always take a little longer to reduce, and so the flow of falling rates necessarily doesn't get translated to lower lending rates, and that helps the bank in terms of improving net interest margins. It also helps the bank in terms of being able to extend credit, because since rates are lower, then they can also extend further credit, and it becomes easier for borrowers to look at, maybe borrowing a bit when the rates go down. So the other aspect of the lowering of interest rates as well as the yields is that their treasury book will also get restated. There would be some amount of treasury profits being reflected in the quarters going forward. And as long as inflation keeps falling and you start seeing a lower trajectory for inflation, there is possibility that we might see maybe another quarter or maybe another 0.5% drop in rates over the year. And that bodes well for banks, both private sector and public sector will benefit from this reduction in rates. And given that valuations, of banks had not really gone up significantly over the last 1 or 2 years, it also gives a relatively attractive proposition because you're likely to see earnings upgrades and valuations remaining where they are. It makes it an attractive investment option.
Okay, well, on to what could arguably qualify as stocks of the day. Lupin and Zydus trading lower after losing a litigation on a key drug. Let's go across to Varsha for more details. Varsha.
Thank you for that. So yes, Lupin and Zydus both the companies are under pressure because they've lost the litigation on a particular product called Mybregon, which treats overactive bladder. Now, there was already a court case going on with the innovator company for this product, and the decision has gone in favor of the innovator. Now, please remember that previously both these companies had got US FDA approval to sell the generic version of this product. And now, why this is very important and why the stocks are down, because these products were very important for both Zydus and Lupin. They contributed meaningfully for both of these companies in first quarter of FY25. So for example, for Zydus, it contributed almost $40 to $50 million of sales and 15% of EBITDA in Q1 FY25, while according to consensus estimates, they were to contribute $120 million and $40 million of sales for Zydus in FY25 and FY26. 26. For Lupin, the likely contribution was almost 7 to 8% of EBITDA and $15 million of sales from this product. Now, because both these companies have already launched the generic version of this product, now they might have to withdraw the drug from the market, and eventually they could see some financial liability for both of these companies.
Okay, interesting. Thank you so much, Varsha, for that perspective. Lancelot, let me come straight to you with regard to a couple of these counters. Zydus Life, Lupin. Zydus is in fact down 7.5%, Lupin down 4%. Now, anything between 5 to 10% of their EBITDA impacted. Do you believe that is a bit of an overreaction or justified?
I think, given that valuations are where they are, this is reasonably justified, even though it's down 7-8%, because, this drug does provide them with a fair bit of revenue as well as fair bit of contribution to the EBITDA. And also going forward, one has to be a little careful that, we've still not seen impact of anything that is coming up on the US front. Hasn't yet really got factored into the earnings calculation so far, and that may unfold over the next quarter or so. So it does look like it's becoming a fair valuation. It's not really let's say an overestimation on the downside. I think it's reasonably fairly priced in at this point in time.
Okay, so fairly valued. Kush, Bora, your view with regard to technicals on both of these?
Well, both of them have been under pressure for some time, and there's this falling trend line resistance for both these stocks. Even in the last week's up move, when these stocks tried to move higher, they weren't able to cross, some key technical levels, and the volumes also on the way up weren't really as encouraging. So I will not take this dip as a buying opportunity. In fact, some of these support zones are being tested. So for a Lupin that comes close to the 1900 mark, 1890 to be precise. Beyond that, the recent low of 1800 will come into play. Zydus also very close to the recent low that it made last week, which is close to the 795 mark that comes into play. So I wouldn't really be in a hurry to buy some of these names. The major trend has been negative, and any recoveries have also not been so meaningful. So for now, they are an avoid for me.
Lancelot, are you buying into any of the healthcare? Actually, not healthcare. Are limited to pharma within healthcare, only because of the fact that there is a bit of an unknown element to what could happen to pharmaceuticals. So sometimes valuations come in your favor. Have you used any of these to add up positions or buy new positions into pharmaceutical names?
Not yet, because while the prices of these stocks have come off, so valuations have come off, we need to understand what is also going to be the impact on the sales and the profitability going forward, especially because for most of these companies, the US is a major market, and it's not only the tariffs actually as an issue. Over the past couple of years, we've seen a lot of companies be subjected to FDA inspections, and there has been greater restriction in terms of maybe making it more difficult for for Indian companies to access US markets. The other interesting thing that we've been seeing is that while many drugs do go off patent, the values or the prices of the original drugs actually are dropped down significantly. So people who are trying to compete in that space and make other versions of the drugs that have gone off patent find it difficult to really sustain, because the original manufacturer has dropped prices significantly. So I think the entire model has been changing a bit, especially with those companies, pharma companies, which are focused on overseas markets, and because of which the growth coming from overseas markets is a lot less as anticipated. So really speaking, I haven't been adding any of these stocks at this point in time.
Interesting. Lancelot, so what have you been buying at this point? What is that one sector or maybe 3-4 bunch of stocks that you're really liking, and give us the rationale behind those?
So in the healthcare space, we've been very positive on the hospital sector, because we believe that is a domestic play, and it is something because of the demand that has been growing. We are seeing greater need for hospitals, as well as, with more and more people getting covered by the hospital space and by insurance, that sector is gaining a lot of traction. So there is a shift from, maybe smaller hospitals to consolidation taking place, and you are seeing larger hospitals consolidate and create their operations where they can take advantage of scale. So that's a sector which we've been looking at and adding. The other has been in the insurance space, because we always felt that life insurance as well as general insurance is a space that is going to see significant growth in India, and it's a domestic marketplace where we aren't seeing that much of impact because of things, direct impact because of tariffs, etc. And we did get results of ICICI Prudential, which came out yesterday, that have shown that the company has been growing. There is a focus on protection now, more as opposed to looking at insurance with investment products. And that, growing awareness of taking insurance for life protection is actually driving business of the insurance companies on the rise. And that we feel is a good opportunity.